Hey, welcome to the show with us on the 14th of May here with myself and Rich.
That has just reminded me it's somebody very important's birthday today that I hadn't remembered up until now.
It's not your mum's birthday, yes?
It's not, no, the 14th of May. Welcome everybody to the show. Look who's joining me for the Open.
I don't wake up for just anyone.
Don't know what to respond to that. Angeline in the house for the opening bell. So, it's because Piers let us down. Buckworth, if you're watching. So Piers was meant to be in this morning. However, one of his traders booked a trade wrong in Hong Kong and his clients not too impressed. So Piers is cleaning up the mess afterwards and has been since 4 o'clock this morning.
Oh my goodness me. Well, don't get used to this because I was actually up really late last night. Ethereum was moving. So
Right.
I'll tell you about that later. But what a big day!
A big day indeed. Shall we
Markets,
have a look at the coming out?
Let's have a look at the coming out.
So there we go. Oh, well done, guys.
Well done, Cam and Terence.
That's all updated well, hasn't it? So we got Piers Buckworth with us in the other seat this morning. Then live from the trade desk. What are you going to be looking at 8:35 this morning, Ange?
It's going to be really exciting because we have had, of course, those moves overnight. Markets coming back to levels. Seen beginning. We're back to levels seen beginning of 2025, end of last year, and there's this exuberance. Now, are we, back to risk on? Are we now, taking a look at the next trajectory upwards for markets? The mega cap tech stocks, looking at that because of course they got pounded in April. Also looking at BBVA because they are looking, according to Expansion, is that how you say it? To cut up to 2,500 jobs.
Who's that? Sorry,
BBVA.
Okay. Right. Yeah. Right, 9:10. We've got Laura Ann Moore joining us. She is new to the show. However, she does our investing videos on IG Invest, Instagram and TikTok. So it's going to be great having her. She is so bubbly, so full of personality. She is going to be lighting this place up, as is Jolie, another newbie to the show.
Well, not quite so new. She has been on before.
That's right, yeah, she was on.
She is on with us, and it's so exciting because she has moved her entire life from Chicago, packed everything up, put stuff in storage, and she has come to be with us on the show at 9:35.
If you have any questions at all about the Tasty platform, Jolie used to work on the trading desk of Tasty in Chicago, so she knows all the guys across there. One of them who I'm having beef with.
Oh.
So let's go into that. Anthony Batista.
Well,
I had a wonderful interview with him, was very nice to him. And what does he do, Ange?
He runs a poll.
Runs a poll on Twitter, first of all.
Whack my screen up, people, because I found this when I was talking to Dylan yesterday. Never let it be said that I can't multitask. But who do you think Tom Sosno will give the promised ring to in Milan on the 23rd of June? Is it Rich on Macro or Dylan Rattigan?
So even worse, they had a full discussion about this on air.
They did.
So Bat came out of nowhere and he goes, "Come on, Tom, tell us, who are you going to give the promise ring to?" And he used some Italian mafia term, a guma, which is like a mistress. Who's your new guma?
Yeah.
And is it Dylan or is it Rich? And Scott Sheridan came in, who Scott is another one of the guys who created Tasty from nothing. He says, "Oh, I think it's Rich. He needs it more." This out live on television. So, Scott Sheridan, tomorrow I'm interviewing you, and I'm coming for you. I am not holding back because you and Bat have got it coming to you.
There's something else. Have you seen this?
No, go on.
Bum, bum, bum. I saved this specifically for you. It's who will become Tom's new Guma?
Shut
Who will
But that's not even me.
Have you not seen this? Have you not seen this?
This must be an AI representation of me.
I think it
that's very
I
funny.
think it was made by someone called Elcom, and also it is really funny for those of you who saw who will strangle whom. I love that play on words as well. Yeah, so I don't say anything because I wanted to be a surprise for you. Is this really the first time you've seen this? Is this really the first time you've seen this?
Yeah, I don't look at Bat's Twitter feed at night. I've got better things to do.
I was there going, Ethereum. I wonder what's going on there. Oh.
Right.
Ah.
Oh, that's war. That is war. Just wait until I slice and dice some of the interview with Bat, and I'm going to go for it. Sosnov was obviously on air listening to all this, and his answer, which was valid, was, is that really my only two options in Italy? Out of the whole of Milan, are those two my only options?
Well, you are going to Milan at a very, very good time because, you know, the S&P closing year-to-date gain, you know, who would have thought so soon, right? So soon. Almost feels like April was a sort of blink now, or some sort of like
did anything happen? Something happened.
But it's been such a roller coaster. I mean, NASDAQ as well. I mean, you know, this, even after the softer than expected inflation numbers, they were soft, but, you know, not. I didn't think it was a big sort of number to crow about. But the fact that we are now in almost like a blink of an eye, we're back to like, oh, things are actually not so bad again, right?
Yeah, we put the matrix up yesterday, and what we're pricing in now is $280 of earnings on a 21 times ratio. So that's back to the big highest expectations on in January.
Yeah.
So 12% earnings growth. Now we are tracking for that. Q1 was indeed 12% earnings growth. Yeah. So it's almost like we're saying we've taken the global tariff rate from 4% to 14, right? That's if you add everything together and take it by the amount of trade. It's a 14% global tariff. If that doesn't have any effect on earnings, then yes, we should be 5,880, which is exactly where we are. Do we believe that that's the case? And
do we believe that we're not going to see more spanners thrown in the works? I mean, multiple brokerages think so. After the MOU, shall we call it, an agreement, we haven't seen the nitty-gritty. Devil, of course, is in the detail. Multiple brokerages have already lowered their odds of a US recession, right? We've seen Goldman's do that.
Oh, that's fair. The worst case scenario has definitely been taken off the table.
Yeah.
So, right, who have we got out there this morning? Monkey Man saying Ange clearly in a flirty mood. So that's funny because
don't get used to it, because I do need my shut eye. Do not get used to this, because and in order to, I'm like that really inefficient but sexy vehicle. Needs a lot of fuel, a lot of sleep. People,
give us an example of what. An inefficient but sexy vehicle. What's a big F-150?
Yeah, or an old Aston Martin.
Oh.
You know, yeah.
Are you likening yourself to a DB6?
Yeah, DB6. Yeah, with grey has to be that grey. Has to be that grey. Cam was just taking aim at me this morning. Oh,
go on.
Cam just said, or an old Land. Did you say old Land Rover?
Well.
That hit me right here.
Talking about taking aim. So our chief content director, Sophie Cocker, who is now going to jump up on the train because she'll be watching this on the way in. Sophie Cocker and I were interviewing somebody for a video editor position. So we're looking for a video editor for our YouTube videos. And also going to take the show to a whole new level, because we're going to do a load of stories while we're on air, and take it to the masses, people. But the interviewee said, "Oh yeah, Ange is so funny. She just got so much banter." And Sophie said, "Oh, what episode of the show were you watching?"
Oh no! Which one? Was it actually me? It was someone else.
Maybe it was another Angeline.
Oh.
No,
Can I ask which one?
no, it was just one of the episodes. But clearly he was a big fan.
Oh, well, Waka Waka, Steve Davis, Monkey Man, Boise, saying this.
Boise's trying to suggest there you've got an anti-aging AI filter on you this morning.
Was he talking about your the one by Elcom and Tasty over there? I'm sure there'll be more before Milan comes up. Steve, thank you very much. There is a reason for this attire, and also, Rich is looking not healthy. It's very hot.
Average.
Yeah, it's very hot in here, and we have fans. He's rocking the Mariah Carey fan look here. You can't see, but there's a fan between us. But yeah, we're trying to cool it down over here, especially with the weather warming up. Milan, if you haven't got your tickets yet, I hear they are starting to really reduce in numbers. So please make sure you get your tickets. But also, we've got overnight action, don't we? Yeah,
let's just go into that. And the interesting question from Genghis Khan there as well, things I thought I'd never say. But yeah, we'll go into overnight action and then we'll answer some of your questions. So yeah, I wanted to ask if there's been any change in the size of spread bets. Notice that the minimum size for gold used to be $1, I assume $1. But now I can place bets as low as 0.01. There's been a lot of work done on the platform. I know that the spreads on the S&P 500, Elliot Harris has worked absolute miracles to get them really down. So we can now trade S&P on the index side, the index options. It's incredible.
It is incredible. He's also working very hard on some of the options products that are going to be unveiled hopefully in the next few weeks. So watch this space, because the moment Rich and I get the go-ahead, we're going to talk about it yet again on the options side of things. And don't forget the wonderful work that we've had from the Smart Portfolio guys and the Martin Harris and Aaron as well, and bringing to light this double your interest, earn 8.5% AER variable, whacking up my screen there for you so you can see it. And lots of questions from the floor, from all you good people about, what are the key things to watch out for? How many times do we need to trade to lock this in? When do we have to do it by? And what interest paid on balances up to what?
That's incredible.
100,000 is the answer for that.
I'm actually tempted to bring my ISA across.
I know, right? We did. I remember. I could see you were doing the mental maths in your head. As 31st of
8.5%. That's absolutely incredible.
Double the rate of the Bank of England, people.
Yeah. Great interview with Catherine Mann on CNBC this morning as well. She actually voted for no change last week in the Bank of England rate decision. And she put out her argument, and she said, despite they travel around the country before the decision, despite people, sort of saying things are slowing down, things are terrible up north, she chose to ignore that and go for a no rate change last week. We've now, you saw the jump in the GBP yesterday. So we're now looking at just 50 basis points of cuts priced in, and no June cut for the Bank of England. So that's what Goldman's and Morgan Stanley are saying. So for those going in for that deal, then that's good news. Yeah. But not necessarily good news for the mortgage payers.
Nope, and not good news for those like Denise, who is in our IG front desk, who is trying to sell an investment property.
Right.
My mate, Andrew McKelvey, if you're listening in on this, and many others, Boise as well, asking about, some of you asked about my friend in Kent, in Wingham, who has 4 properties. The crux of the matter is that he's had to drop the price 3 times.
Who's got 4 properties?
In Wingham. Would you like to buy a property?
Greedy. This is the problem in this country, is people having multiple properties.
This is this person's only job, right? He's a property developer. But the issue is no one's able to sell theirs in order to buy the ones that he's doing up, right? He's building these properties.
Oh, shame. Oh, poor guy.
Anyway, lots of people coming online right now saying new clients only though, Spike. Yes, this is true. New clients only. Unfortunately, I am trying to figure out, Martin is doing some legwork for me. If you are a business client already, can you open another client? I suspect it's going to be a no. Someone else asked about the protection, whether you'd be protected if you had like 4 accounts, for example. No, it is per client. just underlining that is per client.
So as we expected, Sophie Cocker was watching, and she says, can't sign into the chat right now, unfortunately, but thanks for throwing me under the bus. Just imagine in her northern accent. Angeline, you're always the funniest.
I would be messaging on this on the Trade Live with IG, and being fake Phil whilst he's in Menorca on the beach. But because I'm here, I can't really do that.
Right, let's get down to some news then. So we've got a UK bid that has been referred to the Competition Commission. That's right. It is Aviva and Direct Line. So suffering a potential setback to the deal on Wednesday after the antitrust watchdog said it would review the deal. The CMA considering whether the transaction could result in a substantial lessening of competition and has invited feedback by May the 29th. So working quite quickly on that. Watch out for the insurance names there this morning, especially Direct Line. And what else have you seen this morning?
Showing up my screen, whack that up there. That's why I was watching that last night. Ether finally outperforming Bitcoin. That is the buzz at the moment. Lots and lots of people out there saying that Bitcoin has had his day in the sunshine, right? So it's all the others that are playing catch up now. All the other altcoins, for example. So keeping an eye on the space, especially with Coinbase as well. So all the
big move in Coinbase
my
yesterday.
goodness
Wow.
me. Yeah.
I was very jealous of that. No way. Are you serious? 24%. I looked at it yesterday at 4 o'clock and it was up 15, and I thought that was too late. 24% is ridiculous.
Take a look at that, yeah.
I mean,
we're talking about
back
this.
into fantasy land here.
We are, and Safe Arbor and I were talking about this, right? I mean, everyone knew about this inclusion. So what happened? Everyone knew.
Well, clearly not.
It's been flagged for ages and ages. So, we were trying to figure out, was it a big buyer that came in? Is it something,
I don't think I've ever seen a 24% move. Okay, the market was ripping as well. But, yeah, there are no words for a 24% on an index inclusion.
Was that because Ange was up last night? Yesterday evening doing something, but yeah, it's a dramatic move.
All sessions opened, it was only up 10. We could have taken 14%. That is the miss of the day yesterday. What else were you trading yesterday, Ange?
Loving oil. I did say to everyone that be careful because oil right now, if you're looking at, it was down. Whacking up my daily chart here, so I'm going to change that to a daily view there. Bear in mind we're coming up to that resistance point last seen on 23rd of April. Be careful, come off those trades. So I came off oil, made a bit there, but if you see that we hit that resistance and then we bounce back down, then we could have a lower leg down. But oil, I still think in the medium to longer term is a bearish story, but you can trade the range. This is a really good, if you like channel trading, you like scalping, this is a good area to look at. The other thing is the EasyJet's Ryanairs. Have you got exposure to that at the moment?
Well, I'd say let's just, because that oil takes us nicely into Trump in the Middle East. So Trump is, of course, there touting his Saudi deals. We won't talk about his personal family deals that he has in the Middle East, but 600 billion of investment into the US he has secured before this trip to the Middle East, including 120 billion defense deal, which sounds great. Musk was there. Sam Altman was there. Of course, those two don't get on well at all. And Jensen was there. And there was a big positive for NVIDIA with the PIF signing an initial deal to take 18,000 of NVIDIA's latest chip. So NVIDIA up 5.6% yesterday. That was really going good guns. Still only up to 129, is it?
And NVIDIA is going to, I'm sure Jensen has already whispered into Trump's ear saying that they have to keep selling chips into China, because if they do not keep China hooked onto NVIDIA's superfast chips, they'll start developing their own.
Yeah.
And then they're going to lose a grip on that market. And that's what Jensen does not want, right?
No.
Does not want that. So I know you scooped up some NVIDIA, Rich, in that.
Yes.
Yeah, the April madness. And I just kind of think, you know, in the shorter term, this is looking like it's ticking up right now. And we're probably heading back towards support at the 140, 146, 153 level if you think you have a, you know, this is a bullish short-term play.
I did consider selling it yesterday. So this has helped my ISA to new all-time highs, because it's the first time I've had something really kind of spicy in there. I've got some Nike, I've got some NVIDIA.
So have Adidas?
No, not in the ISA. They got to be real top quality ideas on the ISA. And so that I did consider selling it yesterday, but still only 131. So I'm not sure. I think I'd want at least 140 before taking out of the long-term portfolio. And it's nice to have in there. I mean, the rest is very defensive anyway, like SSE and Occidental Petroleum, and we got some copper miners in there. Got some Glencore in there. Glencore's done well. But yeah, the real longer-term ideas that I'm happy with.
Rexpo has been doing well this week.
God, that definitely, see, that's the kind of thing that would never get into the ISA.
I mean, you know, this week it's just, you look at that. That was, yeah, oh, sorry, daily. Yeah.
Yes, it's just, I mean, this thing's just, it's hard enough to trade it, never mind invest in it.
And I think Anglo also had a pretty good week. I mean, let's be honest, the miners were very happy after Monday, right? Today, though, Trumpy meeting Syria's president in Saudi Arabia. Do you expect more deals to come? You know?
Of course. I mean, they've got, going into these things, they've always got a load of deals lined up. So as soon as we heard that Jensen was going to be there, we should have known there was going to be a big NVIDIA deal. You know? If you know the lineups for these things, you can kind of predict it, I guess. But the questions, you know, is he going to be at the Putin, Zelensky? Is Putin even going to be there? That's what's on the front page.
Or is it just going to be Zelensky sat?
Zelensky sat himself.
Yeah.
Yeah.
That is a good question, because will Trump be there? I don't know if there's enough time. Might be if you know, he jumps on that plane that the Qataris gifted him.
Oh, it's not ready yet.
Trump's going to be in Abu Dhabi on Thursday. That is after his visit to Qatar, because he's going to meet with the UAE leaders. And then he's slated, this is according to his official schedule, right? That has been distributed to the likes of CNBC, to Bloomberg, to Reuters and all that, which I'm still tapped into. And he's slated to fly back to Washington on Friday.
Why are you tapped into that, Ange? Where's that come from? For any of you that don't, any of you that haven't watched the show before, this lady sitting to my left, what are we on? The TV's right, has an incredible CV and career history, including Reuters, including Bloomberg, where you used to work with producer Fred, didn't you?
Long time ago.
Long time ago. And now, yes, so we have her on our show here, about to ring the opening bell in 5 minutes' time. We probably should take a quick 2 minutes break.
We should. And also we've got all these questions as well. Monkey Man saying AMD looks close to breaking out.
That's it. Yeah, AMD we talked about when Piers was here last week. what is it? I haven't even looked at it since, and it was 101, I think. What's it now? 120?
113.
113. Yeah, hasn't actually gone as high as.
But it is very close to the level that Monkey Man's talking about, which is 26, last seen 26th of March. Yeah.
Right, coming up in fast markets, I had a go at shorting meme stock, kind of something that is as crazy as a meme stock. I had a go at shorting yesterday. I think I was down about 6% within 3 hours.
Oh, gosh.
But I've still got it on, and I'll tell you why in fast markets this morning. So join us for that at 8:10. But we're going to We're going to quake a quick 2 minutes, and we'll be back for that opening bell. Join us.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back. So we've smashed through 600 subscribers on our way to, I want 750.
More. We need this new bell, people. So please like and subscribe. Hit the button right now. We are 30 seconds to the opening bell. 15 now. 15
When's the last time
seconds.
you rang the opening bell, Ange?
Several days ago.
Right, I'm going to send this to the London Stock Exchange, so make it a good one. There we are, people. We are off and running for the 14th of May, looking to see how the FTSE is going to respond to the S&P 500 now being up on the year. Are we not going to get back to the highs that the FTSE was at before the sell-off? Well, let's find out this morning if we're going to make our way there. With next up 40 basis points. There was a story this morning about Marks and Spencer's being able to claim up to 100 million sterling from cyber insurance.
I know. I really doubt it, especially since the other companies that have been affected by this have not been able to, right? So we'll see.
It depends how good your insurance is. So that's taken Marks and Spencer's up 1%. That's makes a lot of sense. Vodafone dropped to 68.54 yesterday. I closed the rest of my short yesterday afternoon, 68.54. That's trading up 0.5% there. Still concerned about the next set of numbers because the CFO, Ofsky, I don't think you leave a super yacht. You leave the Titanic. 30 basis points for Bats this morning.
Burberry hasn't crossed yet, but we are looking at Burberry there. Q4 retail comparable sales down 6% versus 7.7 estimates. Revenues, though, in line with expectations. So looking out for that when it uncrosses. Also, watching Compass Group, first half revenues are down to, I think, 22.5 billion there. So operating profit also 1.6 million.
So Burberry is on the upside. It is in the opening auction uncrossing higher than 5% at this moment in time. So the guys in the gallery are going to watch that for us. You can see, much of a muchness outside. On the down moves, Compass.
Yep, down 4.
Going the wrong direction, that one.
Yeah.
Going south today, down 4%. Flutter down 1.2.
Let's take a look at Experian as well, because Experian, we had something this morning about its full year. Experian is down 0.75% there. Of course, this is to do with the consumer market as well. For those of you that trade this full year, it's saying 1.5 billion, which missed an estimate of 1.6. It's down 0.75% there. Taking a look at the drug sector as well. Did you trade Glaxo and the likes earlier this week when it got caught in the crosshairs?
See, it was meant to be up 2% this morning. That was the early call.
Yeah.
Because they have bought
Boston Pharma. Is that right?
Efimosferin,
Oh.
a medicine to treat and prevent steatic liver disease.
Oh.
You tell I'm not medically trained. So I'm assuming that must be who they bought it from, the one that you mentioned there. Imperial Brands H1 adjusted operating profit 1.65. That was pretty much in line to deliver full year results in line with guidance. And the CEO to retire.
Not so changing of the guards there. Persimmon down slightly there, 0.3% for those of you that look at and trade the UK housing sector. Persimmon came out with talk sale of FibreNest for £100 million there. Not much of a move. And Vistry, let's check on that because they maintain their expectations for the full year. Vistry Group pretty much flat there. Any other movers? Let's have a look. Trader friends, which ones are you looking out for?
Do you like a bit of the casino on a Saturday night, Ange?
Oh, Saturday night I am normally watching what's on my list, and what's next on my list is Conclave.
Or other casino nights?
Oh.
Not a Vegas girl? No. Well,
I've not been to Vegas. I know you have.
There is. I have indeed, yeah. Had my 30th in Vegas a couple of years ago. We've got positive news for Rank Group. So Rank Group, of course, the UK casino. Anne's going to get that up for us. The government published the statutory instruments necessary implementing the land-based casino reforms in the government review of the 2005 Gambling Act. So it looks like they're going to permit the increase in gaming machines and also the opportunity to provide sports betting in casinos. That could be fun.
That could be fun. Look at that go. I mean, like it's up almost 8% there. And we know that a lot of the casino type companies in the US, when Trump came to power, it's 2.0, they also got an uplift there.
Wow. So Numis are talking about this representing a 20 to 25% uplift in the current full year EBIT forecast. So that's exactly why it was up so strong there that you saw on the graph.
Burberry's uncrossed, people up more than 8% now on that news. Wow. Let's have a look. Wow, look at that popping. I'm trying to zoom that in for you so you can get a better look. It comes after very strong sessions as well. No thanks to that US-China MOU. We're still waiting for the details there. Let's take a look to see whether it's dragging the rest of the luxury sector up as well. Not quite yet, actually, interestingly enough. But that might soon change as it's just uncrossed. Burberry up more than 8% there. Let's have a look at ABN AMRO as well, because we had numbers from ABN AMRO earlier. It's popping up more than 3% there. Q1 net interest income, 1.5 billion euros. Still sees net interest income for the full year coming in at up to 6.4 billion. So kind of in line with the expectations. Investors looking like they like that. So up 3% there if you're looking for a mover on the upside.
Right, quick look in Europe. What is popping this morning? We've got Ryanair taking off up 2.7%, 2260. Rheinmetall up 1.5%, 1,632 euros. Deutsche Telekom up 90 basis points. So the Germans doing well. I know it's a certain German person's birthday today, but Porsche as well. And we've got, so some strength there in the European stocks.
Thank you very much there for the reminder, Rich, because Ryanair, I can tell you that's a good cue for me to come out of that. Yes, and Ryanair was a good one to close out there because it's a really good timed, and I've been sat on that for a while. Ryanair seems to be, some people, like we got those of you there saying Wizz Air works for them. You know, they understand the momentum, the mood music. I think it was JS14, someone like that, on our chat yesterday, and they've been just focused on Wizz Air for most of the week. For me, I find Ryanair works really well. It tends to move after EasyJet, so it almost mirrors EasyJet but moves a bit later. Speaking of which,
on your screen there,
TUI. Yes, I want to show you TUI because TUI is one that is heading south. Here we are. TUI down 6% there.
Oof,
do you ever use TUI? You look too premium for TUI.
I think I flew TUI once in my life. Wouldn't rush to again.
They also code share with the likes of, Nelson's and those that have those ski packages,
right?
Those sun packages.
You've lost me.
But, they're also seen as, I used TUI during COVID and the lockdowns or post-lockdown, because I kind of thought if I was going to get my money back, then TUI would be the one. But they're down more than 6% because they came up with an underlying EBIT loss of 207 million euros.
Did you ever get your money back from the company that was fleecing you for 6 months?
That would be Uber.
Yeah.
So I got it back not via Uber. They maintain, I'm very angry about this. Any of you have been conned by this, please let me know, because Uber won somehow or another.
Sounds like a Star Wars character.
Yeah. Uber One, if you see $4.99 on your, it is like Darth Vader. It's like, well, I want to kill Darth Vader. It's
I was more thinking Obi-Wan. But...
Obi-Wan, yeah, Uber One. Uber One Kenobi. Give me back my $4.99 that's been going on for 12 months. 12 months they've been taking $4.99, and they somehow or another, I called up Uber and they said, no, ma'am, you would have, maybe it's happened to many people, ma'am, somewhere in, I don't know, Philippines. Yeah. India, and you might have accidentally swiped and accepted this premium thing, which gives you, they said, gives you amazing offers. You get cheaper Uber delivery, cheaper Uber Eats. I'm like, have you looked at my account? I not only don't use you very much, but I only use you for transport. So I got some of my money back through John Lewis because I paid using
Nice.
my John Lewis credit card. But I have to fill in for
A John Lewis credit card.
So they have amazing insurance. I'm not speaking for the company, but they have amazing insurance. And if you complain and you say, I reached out to Uber, they're not doing what they should. And they have got back 2 months, 3 months. And then they've said, I have to fill in these forms for every month.
And you were a big deal on the telly. Did you not tell them that you would start ranting about it on TV?
Yeah, Uber One, $4.99. If you see them taking it out on the 28th of every month, you've been conned. You've pressed something on the Uber app, and they are.
I tell you what, that's a good bit of money management, is to go through your Apple subscriptions and work out what you don't know that you're paying for.
Exactly.
$4.99, $6.99, $9.99 all the time. So yeah, talking about money management, we've got Laura Ann Moore coming up in about 45 minutes time. She is the queen of money management. She does all these presentations. She goes into companies. She stops people in the street with a microphone and speaks about money management. So that's going to be a really fun interview. But we have got Fast Markets coming up in 3 minutes time. Join us for it and find out what stock I've shorted that's already causing me pain. And I pretty much know it's going to continue that way. We'll see you in 3.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome to Fast Markets with myself and Rich, where we get you across the biggest movers of the day. Right, Rich?
Exciting stuff. Right, so who knows Carson Block? Carson Block, of course, of Muddy Waters fame. I listened to a great podcast on Sunday, I think it was. I have a nice little walk around Hyde Park, and he talks about a stock that he shorted. If you've not heard of Muddy Waters, of course, Carson is one of these professional short sellers, right? That's what they do. That's what they only do about 5 ideas a year, but they go really in depth into the accounts of these companies. And here is their one from back in March. And it is app loving.
Monkey Man, you love app loving.
So, Carson had a go at this on March 27th. He's come out with another statement on May the 7th and talking about them having persistent lies. App loving in Muddy Waters idea. App continues to use persistent identifiers that violate users' privacy and partner platforms' terms of service. The CEO denied that it uses persistent identifiers. Carson's saying it's just a flat-out lie, that they are doubling down on their lies and they're still going for it. We show that Shinkin's explanation of how identifiers data are used and how app creates and uses personal identifiers is misleading. A live omission. So I had a little go at this yesterday. This isn't going to be a big one. This isn't going to be a, kind of all in or anything like that. It's just I fancied the market was getting to a level where I can afford to start putting some shorts on because I want to be net short anyway. So, these guys are the pros. It's got a stock that's got a lot of interest. Apologies, Monkey Man. I didn't know that you had interest in this. I wouldn't have done it if I'd known that Monkey Man was a lovin'.
So you're going to short here. Let's. I just want to check. You
shorted it last night.
You already shorted this. And which level are you expecting? Where's your take profit?
So, well, it was actually a really interesting interview with Carsten because he went through the whole idea of a short seller. They don't run it to zero. So I'm not going to run it to zero either. But, if it's true what they're saying, he says either it will come out that they're using these personal identifiers, which is illegal, or it's so easy to do what they're doing that you'll get many more entrants into the market.
So it'll be crushed by competition.
And margins will get crushed. So either way, this thing is, 200, 250. I mean, it got down there on April the 7th, as many things did. But you can see it's almost doubled since then.
Yeah.
So, but I am ready for a wild ride. James asking, what podcast is that? It is one of my favorite podcasts out there. It's with Downtown Josh Brown, who is of CNBC fame. He's on there a couple of times a week. And it's called The Compound and Friends.
The Compound and Friends.
The Compound and Friends. Now, on a Friday, they publish with Josh and Mike Batnick, who just... Batnick's sometimes tough to listen to. He's an uber bull the whole time. So he crows about it as well. So he actually kind of went head to head with Carson Block at one point.
I'm going to type this down in the chat, people, so that you can, you don't forget this. Compound and Friends.
Compound and Friends. So the Tuesday one is take it or leave it, but the Friday one's really good. So that's usually my Sunday morning with a coffee, either out on a run
Hyde Park?
Or walking with a coffee. Yeah. And it's about an hour long, but great, fantastic guests. They get the real, creme de la creme.
Creme de la creme.
The creme de la creme. So you got that. You got app loving. So let's move on to a little bit of your oil idea from earlier, and then do you want to take a look at gold as well, Ange?
Yeah. So let's have a look at oil because oil has had quite a wild ride. We have seen it come up in the last week. This is the daily chart here. And as I mentioned, this is really, for those of you who like scalping, during the week, and also if you're intraday as well, oil, WTI specifically is a good space for that. We are now at this, we're eyeing this resistance that was last touched in April. 23rd of April. And so what I'm looking for there now, I've come off my long. What I'm looking for there now is if we hit that resistance and we bounce off to the downside, it means that there is further downside to come. I'm also looking at volumes because I don't want a dropping off in volumes. Paying special attention to if we see a breakout there, if we see, especially in this week, any deals come through or any mood music from the Saudis, the OPEC Plus gang, especially with Trump being in the region, if it breaks through that mid-March level, then we could see it then progress towards levels last seen 1st of April. So we are at a pivot point here for crude. I am at a wait and see point. And our SACs, you're asking me about, this ties in with the airlines as well, the EasyJets, the Ryanairs. Right? If we see further mood music, that will mean further downside for oil to come, supply ample. Don't forget, we've got another OPEC Plus meeting, I think, beginning of June sometime.
Yeah.
That just means that all that weak oil, going to look out to the weekly chart here. So you can see how far we've come. So this is going to start factoring in. Earlier on in the year, I think it was January, you were all asking me, hey, Ange, when are we going to start seeing the low oil price start to lift these airline stocks? At that point, it wasn't just yet. And the simple reply was, they hedge 3 to 6 months out. And so that hedging now, they should be using the cheaper oil now, and we should start to see that just in time for the summer travel season, in time for when Rich boards his flight to Ibiza.
To Ibiza, that's right. The lads are trying to get us to book another trip now.
Oh,
so we got one coming up in June, and they want to go, a different group of friends want to go again in July. So just FYI. You're on cover duty then.
Oh my goodness.
Right, if we take a look at my Tasty account, it is pretty low on ideas there at the moment. We've got the Nike, of course. I'm short some Microsoft puts. I've got some downside on Starbucks. Got an ex-colleague of mine, Dylan, who's very, very good on Starbucks, great on the consumer stocks. He was head of research at Macquarie. He has the view at the moment that Starbucks really starts to tail off in the next 6 months. And that is because the turnaround story is all hopes and dreams at the moment. Now, the last set of numbers, you would say, kind of proved his theory. Long term.
Go on, Tommy. I love a Starbucks trade.
Yeah, this goes down. This goes out to March of next year. So not Sosnoff's usual guidelines on 45 days, but this is a real long-term look at Starbucks. So, and I've sold 120 calls to have an 85 to 70. Now, I'm looking for an opportunity soon to close this, one of these, so then I make it flat. So then it's just for Starbucks to go down. But I don't think we get the move lower until the next set of numbers. So that's why it's such a long-term idea. Continued disappointment in the next 2 quarters for Starbucks.
And I completely concur with that. Looking at the charts here, we are still seeing weakness in Starbucks. Momentum indicators indicate that. And also, I do know that they are trying very hard, all my friends across the States, saying that the restructuring and the change in their strategy is still not being seen and felt on the ground. They've gone from that wonderful barista, everyone knows your name, you get like that wonderful service, comfy sofas, and then they went to this shocking, absolute shocking, no human, order everything by app.
Hate it.
I know, and in the States it's worse. Not only do they have this non-human thing,
You got to pay a tip.
You pay not so much a tip, but they print out your name. So they don't even lift a marker. And they don't even write your name. They don't even ask you what your name. Yeah. And they print it out at the end and someone sticks on the label and they leave it on the counter.
Or waste the paper.
So exactly. And the point I'm making is they've now sacked tier 1, tier 2, all those people that brought that in place. They've got a new strategy to bring back the comfy sofas, the baristas, the human contact, right? But I don't think they're there yet, and you're going to see this come through in the next set of numbers. I think the next set of numbers will still be not...
Is there any chance they could make the coffee not taste like sheep's urine?
or burnt toast. It's just terrible, isn't it?
Anybody who's ever been to Australia or New Zealand, or even been in an Australian cafe, knows that the Starbucks coffee, like,
it's rank.
Americans, what are you doing to yourself? Drinking that rubbish.
They have closed a huge number of stores, right? And they're starting to build out, especially in Southeast Asia, these, they're called premium Starbucks outlets. So loads and loads of things are being made and changes are being done, but not fast enough.
Now, United Health Group, that is one from yesterday. I think Monkey Man sent you an email on it.
I'm going to look for it right now.
Right, you look for that and I shall get up this chart. Of course, it's had a really tricky 6 months with that, the shooting of the head of the insurance department, but I didn't see the second leg down. Oh, this is just dreadful. They pulled guidance as well, and yeah, this is it's worrying, isn't it?
So Monkey Man, seeing your email now, it said, hi guys, took a small position, got in at 312.
Oh wow,
The trend is still
what,
your
right
friend.
at the bottom, Monkey Man?
Whoa!
Did you bottom tick that? Oh no, it got down to 310.
Yeah.
Fair play. What a trade. So what's your target? What do you think it can get to on the upside? I think we'll see a lot of research reports come out about this in the next few days. R6 Senna's saying the dividend is great. Is this about United Health? And in there, yeah, that's a tricky one. What do we have on tip ranks on United Health?
Just looking at the chart as well, going out to the monthly Monkey Man, I mean, we are now at levels not seen since 1st of February 2021. You know, the question is, if it breaks through that level, I'm just looking at this from a technical point of view, then we could then start seeing it move towards that 2019 October level. So this is a really interesting chart and a lot of pain there. Look at the, you know, if you drill down from the monthly, that's bearish. Weekly, that is also bearish. And also daily, that is very bearish.
But I'll tell you what, the have a look at the analyst forecasts on this thing. So you've got Cantor's reiterated their buy with 41% upside. Morgan Stanley reiterated their buy with 80% upside. Bernstein reiterated their buy, 90% upside. So, and those are all from yesterday. So I might be with you there, Monkey Man. Certainly, I would look at the options market for that. I'll have a look at Tasty this afternoon. Come back to you tomorrow. But it's that one when the short-term news flow is clearly negative, but as R6 Senna, as Monkey Man's saying, the fundamentals should support it.
Should support. Maybe those buys are because maybe they believe in Hemsley, so they've brought back. It's always a red flag or a pivot flag, as we call it, when they bring back the last boss to try and get it through the interim period. So they brought back Hemsley, Stephen Hemsley, who was the former CEO, to come back to the helm to try and guide, United Health through this particular time. So maybe it's to do with Hemsley.
Let's take a really quick look then at the July options market. What are we getting? you're getting $22 for the 300 puts. $22 must buy you a lot of upside. So let's just put it out there that we sell. Actually, let's go a little bit lower. Let's give ourselves some more room. Let's sell the 280s, the 280 puts. So that means that, you know, we would have to buy the stock at 280 if it was below there in the middle of July. But for the recovery, you could even buy the at the money 320 for 24. So then I'm paying net $10. But then how about selling 2 of the 400s? Or even the 410s? You know, even the 410s, I reckon I could sell 2 of those in the middle. And I would end up, let's do a second one of those, quantity 2. Oh, I like this trade. I know very little. I don't like pharma. I know very little about these companies. But for 85 cents there, I can put on a structure where I either own United Health at 280 or I can buy them at 320 and ride them all the way up to 410 for 85 cents. That is a
Sounds like a good deal.
Huge. Is that 100 to 1?
I think so.
Yeah, 100 to 1 payoff if this recovers to 410 by July of this year, July 18th. But of course, you are at risk if it goes above 410. Then you are, you'd be, you know, well, not delta-wise, but you would be losing the profit you'd made. And then at 500, you would actually be short. You would lose money above 500. So let's have a quick look at the chart and see. Yeah, so that would be back to where it was April. So there is a little bit of a risk there. Maybe I take the up to 330 and then take the higher leg up to, you know, 440, something like that.
Just be careful, though, in terms of the estimated cost for new Medicare Advantage patients, right? So you have this as a potential headwind as well. More than half of all Medicare participants have already enrolled. We've got insurers receiving higher payments. We've heard Trump and the people behind Doge as well saying that the whole United Health and also the medical system in the US is inefficient. And requires a lot of restructuring. I think it was Buffett that once said that you know, the medical costs of the US is, I think he described it as a tapeworm of the US economic competitiveness.
Andrew McKelvey's saying also beware the upcoming trial. So there we go. So there's another thing to be very careful about on the risk front. Right at 8:33, let's take another check on Burberry, up 9%. You like a bit of Burberry check, don't you, Ange?
I do, and I love the fact that you know. It's just really had this crazy recovery. We talked about this. This is not one I own because you teased me about being Burberry, and I unwound that late last year. Also because it's the lower end of the luxury spectrum. But look at this. This is a very strong chart here. This is daily chart, and we've seen 1, 2, 3, 4, 5, 6 green candles there, and maybe this is doing its equivalent of the Nike swoosh, you know.
I'm not sure what you would call that. But I do hear ESAR in the background. So I think it's about time for some trading psychology.
Yeah, and stay with us with that. We'll also answer all your questions. Amazing chat on the comms. Do hit the like and subscribe button. R. Sachs and some of the people earlier saying that, yes, there is a lawsuit, including yours, Ange, against Uber. Yes, there is one indeed. And I have talked about it on my Twitter site as well. Yeah, I'm very angry about that still. Monkey, yeah, angry Ange, yeah, Angerline. And Gurleen. R. Sachs and Andrew McKilvey. We already talked about United Health. Any other questions, especially for Issa? Post them right here because we'll be back with Issa after this.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome back. And we are joined by the one, the only Issa.
Hello.
Psychologist, hello.
Yes. So it's been a volatile week.
I
feel like
S&P back
without fail, it's just been nothing but craziness the last couple of months, right? So I think we're seeing like massive rebound off the Trump-China discussions. Today, I wanted to take this moment to talk about, so in the last couple of weeks, we've spoken a little bit about having pre-agreed plans for your trades, specifically thinking about at the moment when you do the trade, what should your exit points and entry points be? I think what we've just seen over the last couple of days is a good example of where news has been really material. And today I wanted to talk a little bit about how to think about when to change your plans actually, and where it actually does make sense to do that and where it doesn't make sense to do that. So there's the famous Mike Tyson quote, which is everyone has a plan until they're punched in the face. Sometimes the news and events.
I love that.
It's a great quote.
I haven't heard of that one.
Yeah, he's like, everyone goes into these sessions with a plan. I think it was in a press conference where it's him and the other boxer, and the boxer was like, I have a plan, in the first round this is going to happen, in the second round this is going to happen, and then by the fifth round this is going to happen. And Mike Tyson was like, everyone has a plan until they get punched in the face. And sometimes events punch us in the face.
Exactly.
And so like, I think what's really important to think about is why do we even set plans in the first place? So the reason we set plans is because when we go through periods of like heightened volatility, we tend to be subject to three main biases. So the first bias is to do with what's called like attribution error, which is when things are going our way, we think we're geniuses. And when things aren't going our way, we think the world is against us.
Yeah.
That is a inherent bias. And what
I
that
have
bias...
that all the time.
Yeah, it's like, oh, it's going great, I'm a genius trader, or it's going badly, not my fault, Trump said something crazy. And like the reality is that in both cases, it's a mix of both. And actually, because of that bias, we tend to move the goalposts after we've put a trade in place, and we tend to become a bit more emotional about those trades. And so fundamentally, like that then leads to us making worse decisions after the trade is live than we would have made ex ante, like before the trade actually goes live. So that's kind of one problem. The second problem is actually we also get particularly bad at making decisions in heightened emotional circumstances. We've spoken about this at length in the past.
If you're perspiring, if you are crying, if you are, not feeling good about trade, if you think, oh, I have some doubt here, but I'm just going to do it anyway, it's likely that it's not a good idea.
Yeah, and like this is an absolutely classic issue that's felt by a lot of investors, like as opposed to traders, which is during really big downturns, when you have like a 20-30% correction, often they get really, really worried about their capital and whether it can be preserved. And so they make quite emotional decisions about selling at that point. And often that really damages your long-term returns because you're selling at the lows and then you're buying in at the highs. Obviously a bad strategy, right? The same is true equally of people who are trading on a kind of more short-term basis where being, as poker players call it, tilted in a heightened emotional state tends to lead to you making bad decisions for a whole host of reasons, but like literally because blood flow is moving from your brain to your extremities, and so then your decisions are a bit more biased because your body is getting ready for like fight or flight, as opposed to like trying to be thoughtful and deliberate about the decisions you're making. So that's problem number two, why having a plan is really important.
And that's part of having that journal as well.
Yeah, so we'll actually talk about trading journals in a second, but like, yeah, I totally agree with you, right? And then the third reason is actually because when information comes in, we tend to absorb that information in a way that is biased. So there's lots of like forms of this, like confirmation bias is a classic example, which is if you have a thesis, you're more likely to look for confirmation in the data. If you most people have what's called a negative salience bias, where negative news stands out more prominently than positive news, and so then they tend to lean more bearish than they should. But anyway, for a whole host of reasons, we are bad or less good at making decisions after the initial part of that decision is made, rather than before the decision is made. That being said, there are points in time where really, really material events happen that fundamentally challenge the like whole premise of the thesis that you might have had or the position that you might have had. And so the challenge with that is, how do you work out when those events are like material enough to genuinely change your mind and change your position? And the answer is there's no like surefire way of doing it. We spoke a little bit in previous shows about the difference between uncertainty and ambiguity. Ambiguity is when uncertainty is when you kind of almost know the rules of the game and you know like the different outcomes you're likely to get, but you might not know which one's going to materialize. So it's essentially almost probabilistic. Ambiguity is like an order more uncertain, which is this idea that actually even the rules of the game are unclear at any point in time. Like the fundamental premise of like how our economy works might change. So like I think some of the tariff stuff is a better example of ambiguity than uncertainty. That being said, for the last couple of weeks, we've known that China and the US were in this trade dispute.
Yeah, and we're going to talk.
Yeah, and we knew they were going to talk, and we knew even like last week that they were going to talk specifically in Geneva over the weekend. And so like this was a good example to me of where actually what we're seeing was an example of uncertainty and not ambiguity. But we knew they were going to talk, and so the question was, what is the probability conditional on them talking that there's going to be a deal or a pause or something? And so if you were opening trades last week, you should have done, or it would have been really helpful to do a kind of what if scenario analysis. And so one thing you can do to try and make your plans more resilient, and this is something we spoke a little bit about last week actually, is at the point in time where you're making your trade, you write down some hypothetical scenarios that would challenge the basis of the trade that you think are kind of reasonably likely. And by reasonably likely, like my good rule of thumb is you think there's more than a 20% chance of something happening. And like there shouldn't be that many things where there's a 20% chance of happening. By definition, there shouldn't be more than 5, but normally there's not more than 2 or 3. And like I think Trump maybe cutting some sort of deal with China was probably high on that list. And actually, we know that if you have a what-if scenario, that actually leads to better decisions in events that materialize kind of in line with those what-if scenarios. But we actually also know that having an understanding of what's called sensitivity analysis, like what happens if blah happens, gives you a better response even when other events happen.
Exactly, and you already have it written down. So you go, okay, wait, is it box A, B, or C?
Yeah.
Right, and you can react there. I'm just asking the chat, do you guys do the scenario? Sometimes
this is
yeah.
this is like the seek.
This is what I do. Yeah.
This is like the seek model.
A, B,
Scenario,
then I
entry,
put
exit,
entry,
change.
exit, and then at the bottom I have change mine if. Right. A question as well here from Jugger. Good morning to you. I think Jugger, are you in Germany? Correct me if I'm wrong. James Niels, good morning to you as well. Jugger asking, why do I keep positions until max pain is reached?
Yeah.
Close them only to see them turn around minutes later.
Yeah.
Please focus on the value of pain since I tend to wait too long to react.
No, but this pain is real, right?
We've all been there.
We've spoken a lot in the past about something called prospect theory, which is this idea that losses weigh more heavily than gains. And actually marginal losses continue to feel more and more painful until you hit what's typically called like a sensitivity threshold,
Yeah.
at which point you start to become a bit more dulled to the losses. So if you imagine the amount of pain you're feeling as your losses increase, it basically increases, then it starts to kind of plateau, and then it starts to kind of actually just basically be flat. And at some point, like if a position is down 70% versus 80%, the marginal difference is pretty minimal. But what's really tough is that point of like maximum pain, exactly like he's talking about. And I think the reality is like, it's really important to know yourself. It's important to think about whether before you get into the trade itself, are there like de-risking points rather than just exit points. So
speaking of de-risking, this is something Jugger that I do. So I leg in if I have more conviction on the trade. For me, it just means that it's easier to unwind. Obviously, volatility hits the roof. It's just a straight out, which you can do in one click on the platform on desktop.
yeah.
But that makes it easier for me to stay less long in the valley of pain.
For sure. And I think actually one of the things that's happening probably here is that actually those instances then feel even more painful when the stock goes up. Because actually, if we think about losses, you're making one actual realized loss when you sell the position, and then you're making a second hypothetical loss that you didn't get the gains that would have brought you maybe back to even or even back to a lower loss. And so then actually you're like doubling the emotional losses. And so then when we're thinking back to those moments, they feel doubly painful. And actually one of the things that's really interesting is actually, I suspect this doesn't happen that often, but in terms of memory and in terms of salience, these moments like burn very brightly in your memory because they're so emotional. And we know that emotions and sentiment really impacts your recollection of events. And so stuff like that would really, really feel resonant and you're likely to remember it years later.
Is that why earlier this year you said, and my new resolution is to have amnesia?
Yeah, that was my New Year's resolution for this year, was to trade more like I had amnesia. Because I think if you can be a bit more detached from some of the decisions, you can just make better decisions.
Yeah, totally.
So we were talking a bit about kind of the reality of changing your mind. So I think one of the things to do, like I said, is to try and do some of that sensitivity analysis before you even open the trade. That's in an ideal world, but often there are events that are unpredictable, those ambiguous events that we spoke about. And in those cases, you really have to ask yourself a question, which is, they've burned brightly in my portfolio. I think they burn brightly everywhere. So I think the reality is like sometimes you just haven't done that, and you haven't had time to do that, or events were just like not foreseeable.
Yeah.
And so I think when you're then dealing with events, there's a couple of things that are really important. Number one is you have to ask yourself, is this event something that persistently has changed the like fundamental basis of how the trade is done. And that's where it's really helpful if you've already written a trading journal to explain what your thesis is. So like, let's say, for example, I've made a trade because I think inflation is gonna like be heightened, especially because of the immediate impact of the tariffs. And then CPI comes out yesterday and it's cool. I'm sorry, if I look at that trade in my trading journal and I'm seeing the data like directly contradict it, I think I have to really think about, does this trade make sense anymore?
Yeah.
Even if the trade is up or even if the trade is only down a little bit. And so trying to hold yourself honestly to what the reason for making the trade was, even if it's a trade, for example, on technical levels, like you might want to reassess those technical levels given kind of where you are today. If it's a more of an investment thesis, if the thesis is like, I have bought this stock to hold for 20 years because I mean, I'll take a very simple example. Let's say I've bought Google because I think it's undervalued, and I think in particular Waymo, just its autonomous car division, is going to be worth, I don't know, like $1 trillion. Like I'm just making this up, right?
Oh, okay. I was going to say, is this the ISAR portfolio?
No, but I think Google right now is trading relative to other tech companies at a reasonable multiple. There's like fundamental stories we might care about. I think it's not done quite as well in its search revenue. It's under lots of monopoly pressure. But let's say for whatever reason you've decided that the long-term view is strong, and then you've seen this like massive rocket up in prices because of the trade tariffs. Should you take off your position? No, because when you're looking at your journal and journal says, I think it's going to be worth more in 2040 for these reasons, then you like really have to like look at that and then look at the event and like, does this event have anything to do with the reason I opened this trade? And if the answer is yes, then you should be listening to the data and listening to the facts. But if it doesn't, then you shouldn't let necessarily the heightened emotions like necessarily mean, oh, I'm going to trim this winner because I'm already up 10%.
Yeah, totally. So you're basically compartmentalizing, right?
I think it's having a really clear understanding of the why you've opened a position. It's like really critical, and a trade journal is a great way of doing that.
Jugger also saying about an example there. S&P 500 yesterday, Jugger says, was an example. Since it went up and up and up, all indicators said overbought should turn, but didn't, and I stayed far too long. So, you know, that's a really good example there. Talking about burning bright in portfolio, one instance that still burns bright in my mind is Northern Rock. Remember when that happened?
Yeah.
And I was in a trade, and the all the apps basically
refused to take orders. Yeah.
Melt it down.
I mean, that is, I think the other thing is like,
awful.
I think this highlights two things. It highlights, number one, the importance, actually, as Eric says in the chat, which is to think about, if you are going to be short-term trading, thinking about your stops so that you can almost take some of the emotion out of these decisions and just lead to it being essentially automated. So I think that's really important. And then the second thing that's really important is to think about position size, because while a lot of those events are unlikely, something like a Northern Rock style example can happen, and like you don't want to be overly exposed because too much of your portfolio is in any single name. That's why a lot of people like to trade S&P 500 and a lot of your index names, because just it already contains a degree more hedging than some of the single stock names.
And ETFs as well, you have that at your disposal here. ETFs are, alluding to what Issa was saying. Gavin Acker saying, I don't do the change mine. If it's a good idea, I would look at adding it to test it out. And don't forget, that's a good point Gavin Acker has just made. For those of you, if you're thinking, oh, this is a really good trade, but I'm not too familiar with this instrument, never traded it before, you can also use the demo account, which IG has, and test it out before you do the live trade.
For sure.
Eric Jones saying, no, I'm purely mechanical. That's amazing. That's something that Tasty really say that it should be the case. If it ticks these boxes, then stay in the trade. If it doesn't, come out of it. Tight stops. Eric Jones saying, I like a tight stop.
This is exactly what I was saying, right? Sometimes you want to take the emotion out of some of those decisions, especially if you are, like Eric's just said in the chat, that he's someone who trades maybe 20 positions a day.
Yeah.
Like, I think one of the things to think about is like also when you're in more intense periods of volatility.
Exactly.
Does it make sense to actually trim the number of names you're looking at a little bit so that you can kind of have higher quality decisions, or does it make sense to put in processes like stops more than you would normally, or maybe tighter than you would normally, to try and help manage that risk?
Yeah, and I like tight stops too, and I tend to try and if I'm in up money and I haven't even got to my take profit yet, sometimes it's okay to just take it off early, right? You're rushing to a meeting, you're not able to keep your eye on the chart. Whatever happens, no one ever went bankrupt from, taking profit early. Eric Jones, I day trade often in and out, 20 positions in a day, so different to a long-term investor. Indeed, time frame does matter.
So maybe I'm conscious that
Yes.
I have to dash out of here relatively soon.
Totally.
So just as a recap, like the reason we try and put in plans in place for both trades and investments, and plans might look like entry points, exit points, a clear rationale of why you're making the trade, and a bit of sensitivity analysis to a couple of main situations. Like the reason we do that is to avoid some of the biases that we know that we have, which lead to us making worse decisions when trades are open, or even when investments, like longer term investments, are open. Those might be things like selling at the lows because of your worries about capital preservation. That might be things like really moving the goalposts as you see events that either pan out as you expect or not as you expect. So plans are really important. That being said, there are certain events that are totally hard, like impossible to anticipate. And so it's worth knowing when actually those change the fundamental rationale for those trades, whether that's a technical level, whether that's an event-driven trade, whether that's a bit of like a macro regime or data point like that, and then really trying to hold yourself rigorously to that understanding that if the basis of the trade changes, you should review whether the trade itself makes sense. Again, like we said, a few good ways of doing that. One is by writing out the rationale in a trading journal. One is by doing a kind of what-if sensitivity analysis. Another one that we haven't had time to speak about very much is to explain the trade to someone else and ask yourself the question, if we were opening it at its current size, at its current level today, would we feel comfortable doing that or not? And that's a really good way of forcing perspective taking in some of the investments or the trades that you might have made. Like I think if you are a long-term buy and hold investor, then actually your sensitivity to day-to-day fluctuations is going to be much lower than someone like, for example, Eric, who's trading like maybe 20 times a day.
Yeah, totally. Thank you so much for coming on with it, Issa. If you like this segment, please like and subscribe. And thank you so much, Issa, for helping us take the emotion out of trading to help us become better traders.
Well, we're emotional animals, and so it's just worth trying to be aware.
Yeah, animals indeed.
Yeah, it's just worth trying to be aware and trying to make decisions like in that reality, right?
Right, stay with us. We have Laura and Rich coming up next, so stay right there.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by...
Tell me when.
Right, everybody. So welcome back. This is Laura Ann Moore, the one, the only. Top of the morning to you.
Top of the morning to you.
So we've thrown you right in at the deep end, right on the all sessions open. So how about we jump into that first, and then we'll give you a proper introduction. You're going to make people very happy, because what's at the top of the leaderboard there, as the biggest riser?
United Health Group, right at
United
2.9.
Health Group.
Oh, it's changing. It's changing a lot. 3.0. Oh, it's changed again. Basically 3%.
So exactly what we were talking about. Monkey Man has nailed it. Monkey Man in at 312. He bought shares at $312 yesterday, and they're already 320. Nvidia having a strong morning as well. So we got up 1.8% there. Anything else jump out to you?
Tesla, not to say it, but it looks like it's doing some things.
Wow, but up at $340 there already, up 1.8%. So yeah, the big rallies continue. I think, do you know how much has been put on to the Mag 7 stocks in just 2 days?
Go on.
Over $1 trillion of market cap.
No.
Bonkers.
What?
Since we've had the tariff, the trade deal on Monday, $1 trillion.
Oh my goodness. That's crazy.
Right, let's have a look at the losers. Any losers there jump out to you?
Apple, unfortunately, top of the leaderboard, not good. Was that 212?
$212 exactly.
$212.
What kind of phone have you got yourself?
Apple.
Yeah.
I've got 2 Apple phones and an Apple Mac. I haven't got the watch though. That's something else.
So I'm a total sucker for it all.
I've got, mine's the Whoop. No, Apple is unfortunately, and Microsoft. Not doing.
So well done, Monkey Man, on that trade into United Health. So let's take a step back. Who is Laura Ann Moore?
Great question. So I am so many things. I am a money mindset coach, financial wellbeing speaker, educator, influencer, podcast host. So many things that I do, but all in the name of your relationship with money and building wealth.
Fantastic. Now, Laura and I met at one of these Finfluencer events.
We did.
And there was probably about 30, 40 people there. But you stood out as the chirpiest, going around chatting to everybody.
Getting around, having a little talk with everyone, as I do.
And we instantly had
we had a really good chat.
A deep and meaningful...
Yeah, we did. We connected.
And we were chatting away for about 20 minutes. So really interesting. We brought you into IG. You're now doing the IG Instagram.
Yes, I am.
And so take us through, what you put up there on a almost daily basis.
Yeah, it's very regular. So all of the content that I do for IG is around like understanding the basic concepts and like topics around investing, so people feel confident. It's a lot of the stuff that I do on my page, but like really just demystifying it.
Yes.
And making it seem a lot easier than some people make it out to be.
And there we have it. So there is the IG Invest Instagram. There you are, in the top.
My orange.
And Beat Emotional Investing.
Yep.
That's another one there. Do you love Guinness? I don't think that's you, is it?
That's not me, but I don't love Guinness.
No?
No. I went to Dublin a couple of weeks ago. I tried. I went to the Guinness factory. It's not for me.
Well, if we've got any Irish viewers in there, not.
Sorry. I tried.
So that is IG Invest in Instagram. We've got 2 Instagram pages. We've got this IG Invest UK and then Markets Live. Markets Live, you get a far less glamorous person on there who's got a bit of a dodgy Scottish accent as well. Right. Screen off there. Thank you, gentlemen. So, you haven't been investing since young, have you? Not since school.
No.
So take us through how you first got into this world.
I mean, I think, so in regards to like the general finance stuff, because it was a kind of like second part of my journey, like my career.
Right.
And it started off, you know, me going into finance from my own personal relationship with money, because I saved £15,000 when I was 19.
Well done.
Thank you.
From hard work?
From hard work. I decided.
Not a lottery win?
Not a lottery win. No, I don't play the lottery. I get bored of it. No, but I wanted to go to drama school and my parents couldn't put me through it. So I put myself through it. Well, I tried to. I saved the 15 grand and then very last minute, I went travelling instead. And I spent all of that money on the other side of the world.
I think everybody needs to do that.
Me too. I'm a big advocate for it. And everyone's like, you know, that money could have, I'm like, yeah, it could have done a lot of things. But actually the life experience that it gave me doing that, and it made me realise like how powerful money is and can be, like the freedom of it. So when I started my Instagram and my blog talking about money, what happened is I actually went on a date, and this was like, must have been back in maybe 2019 maybe.
Okay,
and
pre-COVID date.
Pre-COVID, pre-COVID date. And I went on the date, and at the time I'd saved another 25k, and so I had about £20,000 sat in a cash ISA. And I was like, yeah, like really proud of it. And this guy basically was like, you do know that that's losing you money? And I was like, what? I don't understand. And he actually was like the first person really, it was right at the start of my career, but like to explain, fun, so
Sounds
fun.
Like
I mean, I found it thrilling. It's the first time that I actually paid attention.
Oh, really?
The day. I was like, tell me more. Yeah, you talk about money. And I just spoke, you know, he told me about investing and compound interest and inflation, and then that was the kind of catalyst to me going away and looking into it, really.
Right.
That was the starting point. And then I did loads of research. I looked at like Fidelity did a report, and then there was like another report. There was loads of different reports that I like read about women and investing.
Yeah.
And I was like, what? And then I put it on social media, and one of my friends is a wealth manager. Okay. And he was like, you're right. It is confusing. The language is complicated, but it's easier than you think. So we went for a beer, was together for about 5 hours, and I was just like, what's an ETF? What's an index fund? What? And by the time I walked away from that, I was like, why isn't everybody doing it?
Yes.
You know, it was one of those things of like, when I told my mum, she was like, what? Like, just wasn't a part of her world.
Because it's just, it's not part of our schooling,
No.
which is mind-blowing.
Yeah.
Absolutely mind-blowing. And that's one reason that we come on the show each morning, we talk about trading, we talk about what's going on, but we also want to have this kind of time talking more about the education side of things.
Yeah.
We want to get this out to, you know, younger viewers, and really explain what an ISA is.
Yeah.
What to sit, because pensions aren't sexy.
No, they're not. They're not sexy. I mean, let's be real.
They can be when you get to 60.
Yeah,
You've got a couple million in there.
Yeah, that's when it's sexy. The thing is, like, financial products and financial stuff, like, it isn't sexy. No. And a lot of people, because of what we're taught and how it's spoken about in the UK, like, people have an aversion to it.
Yeah.
And I actually did a round table at the House of Commons recently.
What?
I know, don't. I'm a political gal. And it was about how to get financial education into schools.
Right.
And like how to get it on the curriculum. And it was really interesting because there were so many things that came up. What class does it go in? Who's doing the teaching? Do you bring external people? Because like teachers aren't the most like well known. Like a lot of teachers aren't investing. They have a really good pension with schools, you know. So like, where are you learning this information? I had to learn it when I was like 26, 27.
I've never even thought of that, the fact that not only is it not in the curriculum, but then teachers might not be best placed anyway.
Oh, and they're already stressed.
Have you never been invited into a school to start talking to people in college?
I've went back to my old school recently.
Right.
That was really nostalgic. Walked it. Someone who was in my year is now like the leader of sixth form. And he was like, do you want to come and teach the kids? So I did a whole session on money mindset. But talking to children that are like 17, 18, obviously is very different to like,
the House of Commons.
To the House of Commons, it's true.
Far more sense to the kids.
Yeah. We had a big conversation about crypto and like trading and like all the things that they see online that they don't fully understand.
Right.
And they were interested, but you know, it's a very different conversation. But no, I've never been invited into teaching young children.
Yeah. I think that will come very soon.
Yeah.
I know that it's something, you know, it's hard obviously because IG history, you know, it's around spread betting and CFD, but we are changing into an investments provider as well.
Yeah.
So, we really want to move to that side of education. And, I went to Bristol University recently, and that was great. And they've even got a society, investment society, a trading society.
Love that. I think a lot of the unis do, because I've had a couple of chats with uni students who have societies.
So the demand is there, the interest is there. Yeah. What about some of your stage performances? Having wanted to go into drama, but now on stage for a very different reason.
On stage for, you know what? I think, when that quote that says, like, you can only join the dots backwards.
I don't know that one.
You can only join the dots backwards. There you go. Which basically means, when I've done 10 years of acting training. Yeah. Every weekend was at drama school. I saved that money to go to drama school. My whole life I thought I was going to be an actress. Like
Coronation Street?
Absolutely not. I was thinking more like Titanic 2. That was my plan. I wanted to be Kate Winslet.
Just walk us through what Titanic 2 would look like.
I hadn't thought that far, actually, but I just was obsessed with Kate Winslet. I thought I was going to be the next Kate Winslet.
Yeah. But that sunk.
That sunk. That dream sunk. It hit an iceberg. But the skills that I learned, like when you're in drama school, they just go, get up and sing. Or you get up and you're reading off a teleprompter, or you're learning how to pick up a script and say it to the camera. There's all these things.
Or come on and read out about NVIDIA and Tesla. Exactly.
So either way, it all links together for my career now. So at the time, people were like, it's such a waste. You're not going to be an actress. I'm like, well, I still get to perform, and my speaking career started really early. So.
And so your Instagram pages have gone from strength to strength, your TikTok. Then you've also got your own website as well, don't you?
I do. Mind Money Soul.
How do we find that? How do we find you online?
So if you want my website, www.mindmoneysoul.co.uk.
Mind Money Soul.
Yeah.
There we go. Right.
And the point of Mind Money Soul, so people know, is it's mindset, which is the emotional, money, which is the practical, and soul, which is more like the spiritual.
And there you are. You deserve to feel good about money.
You do.
It's a great strapline.
Thank you. Here I am.
And then we've got all that. Look at that. What's your most memorable experience about working with all of those?
I think, do you know what I really love? When I go in and do a workshop for people. So I've delivered like intro to investing workshops and like money mindset workshops. And it's the conversations I see people start to have, the light bulb moments, like being in front of a group of people and you can see them like, oh my God, that suddenly makes sense. Or, oh my God, it doesn't have to be how it's always been, like those moments.
Yeah.
I love seeing that.
And which topic produces those light bulb moments the most?
I would say the money mindset workshop produces the most light bulb moments, and the investing workshop produces the most more like clarity, like that makes sense,
Yeah.
I would say.
And you speak to hundreds, if not thousands, of women predominantly, but men as well. What is the most common question that you get? What do people really struggle to get their head round?
In general?
And investing.
I think that the thing that people struggle to get their head round is a lot of it is either the fear of losing money. They can't get their head around that side of things. And a lot of the time with people, I compare it to property in the way of like, in the UK, we're so used to just going, oh, buy a house. And I'm like, that is an investment though. I know so many people in my community that have bought property and are stuck for whatever reason. And they were like, oh, that was an investment. And now I'm,
probably the longest term investment you can
The longest, 100%. So that, or the understanding of how all of the different like language and concepts cross over. Like people might understand what compound interest means, but they don't understand how it works in practice, and actually the kind of people want to be told exactly what to do. They want to be told like invest exactly in this, whereas really I try to invigorate some confidence in them so they can do their own thing.
I do remember Tom telling me he heard people were asking him online, where do I open this compound interest account?
Yeah. Or like when people open a stocks and shares ISA, but there is no like, when you open a cash ISA and it will say, 5.2%. But you don't get that when you open a stocks and shares ISA because it's not the account giving you the interest. And people are like, well, how do I know how much I'm going to get? I'm like, well, that's what you then go on. Yeah.
4.25%.
There we go.
But at the moment, 8.5%.
What?
8.5% offer to new customers.
New customers. Get involved.
Open an ISA. I was looking at you in particular.
Really good. Look at me, I'm like, get involved, everybody.
Yeah, 8.5.
Yeah, that's amazing.
Good. So, take us through about what was the first investment you made? Was it ETF? Was it a...
It was an ETF.
You mentioned Tesla there.
Yeah. No, I did invest in Tesla ages ago, but I sold it. My first ever investment was £70, and I did it into an S&P 500 index fund.
Yeah.
Standard, classic.
Yeah.
But I remember. I don't know why it was £70. I don't know what that was specifically was like. I don't know why I chose that number. But yeah, I did that. It was like October 2021 maybe.
Wow. Oh, that'll have done well then.
Yeah, it did. Yes, it has done quite well.
Fantastic.
Yeah.
And I think, so that's the real, people talk about the democratization of investing.
Yeah.
Because even 10 years ago, to put £70 in, you would have been charged £10 commission.
Yeah.
And then £10 to sell it again.
Yeah.
So you got to make 30% before you can get your,
Yeah.
Whereas now, is it commission free? Is it?
Well, I think it's, when I do it, I'm not paying crazy fees. I'm not, you know what I mean? But I do think that when you first get started, they're the little bits that people then get overwhelmed with. Because they're like, oh, well, what does that mean? What does that mean? Whereas I kind of just went, oh, let's just do it and see what happens.
Brilliant. And that's what we find a lot is that there is a difference between a male money mindset and female, right? Now, when it comes to trading, when it comes to investing, females want to understand all the risks.
Yeah.
They want to know, right, what's my downside? What's my get out of jail free cards? What are the costs? So unfortunately, it does create a lot of friction in getting into the game, making those first trades, making those first investments. Whereas men are much more likely to go, yeah, get me involved.
Yeah.
Sort of sitting down the pub going, oh, I've just bought some Tesla. Oh, right, well, how do I do that? So it's what you're doing is helping build that confidence and helping women to not need everything to be sort of perfectly laid out for them, but just saying, right, £70, that's going into an S&P tracker.
Yeah, and I think like with women, what happens with women generally is the narrative is we get told that we're risk averse, but actually it's more that we're just more risk aware.
Or better risk managers.
Or both.
Yeah.
Because, there's one thing wanting to know all the things. And then there's another, some women in my community, have really high risk tolerance, but because they've been told, oh, women are like this, that it actually makes them question themselves. So it's like understanding, because I would say I'm quite low risk by choice. I'm like, there's loads of different factors.
Yeah, you work hard for your money.
Work hard for my money. I don't have anyone to fall back on. I don't come from a rich family. So that kind of money means more.
Yeah.
But yeah, I think just being aware of what the risks are and then taking that and being able to go, okay, now what do I want to do? But kind of lifting the veil a little bit on that, because I think everybody thinks that there's a secret sauce that they don't know about. And it's like, no, people are learning and they're just building confidence as they go.
Yeah. And especially when it comes to, this idea of people in the city, the fat cats, they really know what's going on. They don't. They're in front of their screens all day.
Yeah.
So they've got a better idea,
yeah,
right? But they don't know a secret sauce.
Yeah, and I think that when you get attacked, because I felt like that, I was like, surely there's a catch or surely there's something I'm missing. And you're like, no, it's just what you do with that information, how you make your own decisions, and knowing that there are no guarantees.
Yeah.
I think the hard thing about that, knowing that there are no guarantees, is when you go into something, when you're committing time, energy, money, you kind of do want a guarantee, but that's not how the world works.
That's
so you
what
have
risk
to,
is.
That's what risk is. So being able to be comfortable with that. And knowing that, I think, I say to women, your risk profile can change. You might start off really low risk, but the more money that you make, in your salary or in your job, you might then feel more comfortable to take more risk. You don't know.
Yeah.
So like be a bit flexible.
It is. It's all about the flexible mindset
Yeah.
as well as the money mindset.
Yeah.
What do you understand now, even in the past 12 months?
Yeah.
Right. What is your own light bulb moment that you've kind of thought, compared with how I thought about this in 2020, 2021, I can't believe how far I've come.
Do you know what, for me, one of the things that had a big impact was the conversation that you and me had a couple of months ago when we met up. And we were
in the Ned.
In the Ned.
Yeah.
And we were talking about rebalancing and understanding, like, my strategy has always been buy and hold, buy and hold, buy and hold. Obviously, there's merit in that.
Yeah.
But being able to understand how your portfolio percentages change and what rebalancing actually means and how you can do it in a way that's actually not that overwhelming. Like if you're in a position where you look at your portfolio and you go, I could sell that, hold it in cash for a couple of weeks and then buy back in. And I think understanding that whilst you can't time the market, you can still play a bit more of an active part. That probably has been one of my bigger I didn't think.
I'm very glad that sunk in.
It did.
Excellent. My work is done. Andrew McKelvey, right, what comments have we got? Andrew McKelvey saying his grandma was a great investor, invested most of her cash into whiskey.
Love her.
There is alternative investments like that that are really interesting.
I met a woman a couple of months ago who I did a live podcast recording. She came up to me afterwards and she said, most of my investment portfolio, me and my husband, is in classic cars. She went, for some people, they find that crazy. She was like, but we make, like, over the course of whatever, like 138% on what we do because we know what we're doing. We've done it for 25 years plus. We understand it. So for other people that might be risky, but we know what we're doing. We know how to, all of the things.
Yeah.
But it is.
And we're moving towards, Adam Jonas, Morgan Stanley points out the waiting list for Ferraris. They're sold out for like 2 years.
No way.
Right. And that's because we know we're moving towards this idea where everybody's going to just go around in these automated driverless vehicles.
Interesting.
So you're not going to have your own car to drive. So these things are going to be the real classic, of the future.
Yeah, I see that.
So do you drive yourself?
I have a driver's license, but I don't drive because I'm in London.
No.
Yeah.
Me neither.
But I do miss it. I love having a little beep beep.
It's nice to get out the countryside, isn't it?
Yeah. I was in Valencia recently and I drove on the other side of the road. Never done that before. And everything's backwards.
Yeah.
So I got in the car and I was like, oh, this feels weird. But yeah, I loved her approach to being like, this is something we do that we understand that works well for us. It might not work for other people, but it works for us.
Fantastic. Right, now talking about getting to the countryside, I have a birthday message for Miss Olivia Kumas. Happy 21st. Have a wonderful time. And really fantastic to meet you all last week at the races. So happy 21st there. Oh, to go back to being 21.
Oh. Actually, I don't think I would.
Oh, really?
I love being in my 30s. It's my favourite decade.
Yeah, me
far.
too.
I mean, I'm only in my...
Right, join us after the break because Angeline is going to be swapping over with me and taking you through another few questions.
Ooh.
So the ladies are taking over from now until the end of the show.
Woo. Love that.
So join us. Don't leave. Go and grab a coffee. And the ladies will be back soon.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Hey, welcome back. And now it's Laura in the hot seat with me. Welcome. So good to see you. We saw you earlier on in the year, and then I felt like suddenly you were kidnapped. And I didn't see you again.
And now it's May.
Now, I know.
Now it's, I don't know, I don't have the date on there, but.
Oh my goodness me, but it's good to have you back.
Thank you.
I've seen all your videos, your cool videos with all the fancy widgets and everything, and the difference between ETFs and selecting stocks, and you use like donuts and everything. Really cool. And also, loads of our trader friends having loads of comments here, listening to you, Laura. Andrew McKilvey saying, my grandma was a great investor, invested most of her cash in whiskey. Some of the others as well here. Talking waka saying most living paycheck to paycheck. This is right. This is why we are here to teach you how to compound interest matters, why taking risk matters. There is no reward, people, without risk. Right. So you talked about stocks and shares, ISAs, and also buying stocks. That really resonated with me because I come from a family, or rather the generation before me, just simply did not take risk.
Me too.
And then if you were a girl, it was like you should not take any risk. And in fact, every time I took risk, they told me, you are crazy.
And you're like, would you say you're quite high risk? Where are you at on the scale?
My husband does not dare ask. He doesn't want to know. Every time he sees what I'm doing, he gets a bit freaked out.
Okay, I see what end of the scale you're on. We're like opposite ends of the scale.
I like little but often, but I do believe in giving yourself positive skew.
Yeah, okay.
So for those of you who don't know, I came into my journey early on purely because I kind of felt like, I am all I have. I don't have a silver spoon.
Me too.
I don't have anything given to me. Those of you that are familiar with the Asian culture, males tend to be the kind of, this is what we're going to invest in because they're seen as the social security net, especially in places where there's no wonderful thing like the NHS. I always feel very cross whenever anyone says anything bad about the NHS because you have not lived in countries without the NHS.
It's crazy.
My mum used to work for the NHS. Yeah, she's fully trained by the NHS. She's retired now, but she joined and she still has rose-tinted glasses because she joined, back in the 70s when everything was growing, expanding. And so
sad.
And so I started my trading journey and my saving journey because I felt like I needed to. No one else was going to do it. And I was on the Chevening Scholarship, which had a stipend. It's wonderful when someone pays you to study and they open a bank account for you before you've even, landed.
Yeah, that's incredible. I'm being paid to study now as well.
Amazing.
Doing my financial planning diploma.
There you go.
But yeah, I think the starting early, whatever that means to you, like when you compare yourself to some other people, like I think I started my savings journey quite early because I started at like 19 when all my friends were at university and stuff. How did you feel? Like, were you quite proud of it? Did you talk about it?
I was, but to be fair, it was, if I were completely honest, Laura.
Be honest. Be honest with me.
I felt that there were a lot of unbelievers and haters out there. So, I started my first job at, actually, do you know where Bond Street and Oxford Street is? They've now moved, but I started my first job at CNN Financial News.
Well, no way.
Yeah. Over there, and cover the impact on markets. When the Twin Towers, King crash. I watched that live, the second impact, and was rolled into 6-hour rotating rota. Because everyone's just burnt out, right? So you go into 6-hour, you're on the terminals, because a lot of people don't realize it's also the super fast news service back in the day. But at that time, when I mean non-believers, I don't think they did it out of spite, but it was just the fact that rather than spending the stipend that I was given and going to the pub and having a great time and all that, I saved it up. And what it meant was, the aim was I was going to buy my first flat by the time I was 23. And also try and save up. So it was like, hunting the yellow label, discounted, chicken wings that were sold at the back of, a supermarket late on a Friday before they restock, trying to understand how to flip properties. So I did buy my first flat a day before I turned 24.
That's amazing. Well done.
And I was surrounded by all these people, right? All these people, executives who hadn't yet bought.
Yeah.
And they're kind of like, oh yeah, Angela just bought her first flat. I mean, it was a wreck.
Yeah.
But everyone's kind of, oh yeah, maybe she's just making it up. That kind of like, oh yeah, we'll talk about someone else's.
Yeah.
Yeah. But I always say in this chat, in this wonderful community, don't ever let that get, you do you.
Yes.
Give yourself positive skew, which is why I love trading the markets. I love learning about options. I love delving into the tasty side of things. What is volatility telling me? Should I have my gloves on when I'm trading? Can I have my gloves off? Can I do 20 trades today? Or should I actually just be doing 5? I like safer but later, but I am also high risk. So yet again, even now, trader friends, I'm still they're not unbelievers, they're lovely, they probably care more about me. I'm very worried about my risk appetite. But last week I paid off my 3rd mortgage. I now have 2 left.
Wow, so you got 5 properties?
Well, I unwound them and bulk them up into a large property now. It took me a lot of time because you can't just go straight to So you have to. So I put in stocks and shares, ISAs, took them out, put it back in, reinvested. Some investments were going well, took it out, put it back in. So that's why I know so much about St. James's, Hargreaves Lansdowne, AJ Bell, IG, and also most recently Bitcoin, but that's another story. I was up watching Ethereum last night. But it's about understanding risk and understanding what's out there.
Yeah.
And that's why I know so much about DIY. Lots of our trader friends go, Ange, why do you have a mitre? Why do you have a vernier caliper? Why do you have a cement mixer? A full-size one.
DIY.
DIY.
Hands-on.
I should start a property segment.
You should, actually.
So even in property, there are lots of, do you delve in property? There are lots of hacks, Laura.
I'm sure there are. Do you know what? I wouldn't be against flipping a property, but I think whilst I'm in the space of like still building my business and building my career, I want that to have all my attention, because for me that lifts the ceiling on financials, wealth, that kind of stuff, and then I can use it and I can get stuck right into property stuff. But I think for me, I think I'll know when it's time. I might have missed the boat because, as we know, property is so expensive. But for me right now, like, I know what I'm doing with my investments. I know what I'm doing with my business. I've got like a clear plan for the next, 3-4 years, and then I'll go from there. I think I'd be biting off too much than I can chew if I bought a property.
And that's good managing risk too, because you, as you rightly said, it's all about risk flexibility.
Yeah.
You're not always going to be in the same risk profile.
No. It's going to change.
It's going to change all the time. We're going to wrap soon. I've got 2 kids as well. And just a heads up, have you got kids? So the 2 kids, at one point I was paying double nursery fees.
Oh my God,
and that was like £5,000 a month out the door.
Crazy.
So that's why your risk profile has to change, and you have to, your risk profile has to be what is right for you, not for anyone else.
Yep.
Right? So you don't ever get pressured by someone going, oh, you should be doing this, or you should be taking it off.
Yep.
And on that note, it's so great having you back. Oh my goodness. Yeah, next time I'd love to be doing stuff with you outside the studio.
Yes, 100%. Although I love the studio, even though it's very hot.
Yeah, it is very hot. That's
Very hot,
why
everybody.
I had a jumper, but the jumper's on the floor. And we've got this Mariah Carey fan going on here. Yeah, see? I've got one over there. Richard's got one, hopefully a big one coming, so he needs... Yeah.
Summer is coming.
Yeah, we got Jolie coming up next. So for those of you in all your options questions, we have a guru coming up next. Stay right there.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between 2 similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on 2 companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. 2 companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome to the show, and we have fresh from Heathrow, Jolie Lepselter, all the way from Tasty in Chicago.
Yes.
I'm so glad you're back. I thought you were kidnapped, or you came, had a look at the UK, and then we freaked you out, and then we danced at the Savoy, and then you left, and then now finally you're back.
I know. I was trying to get back as
in
quickly.
between that time.
You know,
What happened to her?
Well, in the Tasty office, we've got a lot of people coming from London to Chicago. No one's ever really done a permanent leap from Chicago to
You're the
London.
first.
So
You're the
I was the
first.
guinea pig. There was a lot of trial and error, but very happy to be here now. I love London. London is great.
Amazing. And what have you done so far?
The first thing I did was I ate at Dishoom. That did not disappoint.
Like Tom's favorite.
Yeah, did not disappoint in any capacity. What else did I do? I went down to Bond Street, looked at all the shops. I've been to Battersea Park,
You spent all your pay already.
maybe.
Okay, you went to Battersea Park. Is that right?
Yes. And I went down to Shoreditch. So I feel like I've only seen like 15% of London still. I'm still very, very excited to explore.
So for those of you who don't know, Jolie used to head up the trading desk over there. So we're very, very lucky that she is here with us because, you know, all those fancy, really difficult options questions, I can now fling it to her.
Yes.
Yeah. So tell us what it was like, you know, being the lead on the trading desk. That must have been mental. Especially in like the last 8 months.
Yes, yeah, crazy time to be. Actually, I feel like since I started in this world, which was in 2020, like ever since then, it's been like probably one of the craziest times in the market history. So it's been so much fun, so stressful. Actually, the days like August the 5th of last year, 2024, when the market really did a big dive down. I've never felt such a sense of peace and calm in my life. For some reason, we were all in the zone. We were all grounded.
Yeah, well,
we were prepared. We were ready to
Options
go.
volatility is great, right?
Yeah. So, I mean, it makes you kind of feel alive, which is great, and it's very interesting. And the Tasty Trade Desk, I could just talk about them all day long. I have nothing but amazing things to say about it. Believe it or not, we're all like kind of like a group of like artists. Like there's a lot of people who are involved in the arts and very creative people who are also just very bright.
And I was also very, very surprised. So I was there in the summer, last summer, and the fact that everyone is so super friendly and have so many diverse interests, right? Everyone, and everyone's so involved as well. Like, you know, Bat, we've seen him on interviews with myself and Rich, but he also brews the coffee every morning, and he has a flask that big that sits under the table. Maybe that's why I now need coffee every day, and I feel like I can't live without coffee.
Yeah, it is very communal. And as somebody who started at the 7 a.m. shift, I very much so appreciate somebody else bring the coffee, so I don't have to get there even earlier. So that was nice to take advantage of.
And there are a lot of jazz enthusiasts as well, because jazz is such a big thing in Chicago.
Yeah.
I got dragged to a jazz concert by Frank,
Okay.
which was at the your art museum.
Oh, yeah, just the Art Institute.
Yeah, and it was great. I think Frank was like, "Oh God, she comes from London where they see like top-notch stuff. This might suck." And I went with like absolutely no expectation. It was the best
Good.
jazz concert, jazz harpist, you know, jazz drummer, and I'd ever seen. And I have lived in 4 countries.
Yeah.
The best I'd ever seen. It was incredible.
Awesome.
Yeah. But in terms of trading as well, there's such a buzz too, because everyone there works on one floor. Everyone's in every single day. Tell us about, you know, some of the key things. Can I be naughty and ask you about like the key quirks, you know, Tom Sosnoff's quirks, Bat's quirks?
You know, they're just the nicest guys ever. Truly. I wouldn't say anyone has anything like weird, but it's definitely like more colorful in our office. Like you'll see, you know, like people like especially on Tasty Live wearing costumes.
I know.
But you know, I mean, nothing too crazy. Nothing sticks out. Yeah.
They realized the moment I arrived after a day, it's like, Ange eats a lot. I was like, how is this possible? You're so tiny. Like, all these lunches. I miss the lunches over there.
I know. Yeah.
So we have loads of trader friends who are super excited you're here because, you know, they have positions in United Health,
Okay.
Tesla. I have long position, NVIDIA, right? So, you know, take us through, for example, you know, how you would, because they would be interested as well. I don't have a position in United Health, by the way, but good on you, Monkey Man, because I think you are up money last time I checked on your position. But how would you hedge using the tasty option side of things, or even the IG options, because IG now offers you this ability on our platform to use options to hedge your trading as well. If you're spread betting or if you're using CFDs, you can also use the options to spread that risk.
So this is specifically listed U.S. options, and by hedge, I think we talked about before a covered call. So I can definitely take you through.
You love covered calls.
Yeah, that's my favorite. I can definitely take you all through how to do this. This is not the only way to do this on the platform, but this is kind of the like cheat code, I guess.
We like cheat codes.
A cheat
we
code.
Love a hack,
yeah, just as you would say, a cheeky little shortcut.
I love shortcuts.
Okay.
Show me.
So we can just go to, what I did here was, when you open up the platform, immediately I went to the trade tab up here, made sure my asset type was options because that's what we're doing. And yeah, UNH is United Healthcare. I put that in the ticker search up here. So say we wanted, we were so eager. All we wanted to do is get this going. We want to look at the options for Friday. So that would be the 16th. Here's our cheat code. So we're going to go up to the strategy button here and take a look at all the different strategies. This immediately is a covered short call. So how is that covered? It's covered by the 100 shares that we're also going to buy in the order ticket. So if we wanted to do a covered call position on United Healthcare using the May 16th expiration, I'm just going to click on this blue arrow here, and that's going to pull up my order ticket. So
just before you go on, is there a reason why, Jolie, that you have chosen the 16th specifically, or is it just because it's the closest?
Just because it was the closest, yeah. I'm just kind of just generally going through this, but definitely up to your discretion on what you want to do. Say I was just an eager customer who wanted to get my cash right now, and since it expires,
that customer.
Yeah, it expires in 2 days. Just get your cash now. So yeah, what you can see here is just one price, right? This is going to be the mid price, but on the left-hand side, you can see them individually. So that's kind of important because there's two different asset classes in here. Shares, 100 shares, those are going to be our stocks. That price is $322.96. Conversely, this is the option. So the 315 strike, that is the credit. So once we combine those, you know, you get this nice little mid price here. But the reason I talk about this is because if we're buying 100 shares at $322.96, theoretically, for a covered call, we would want to sell at a strike higher than that if we want to be a conservative trader. The reason for that being is if for any reason the shares get called away from us, we want them to be called away at a price higher than what we bought them for, because that's where you make the profit, right? Buy low,
Sell high.
Yeah, so I see the strike here is 315. It just took us to the closest, like in the money option. So if I wanted to be super conservative, I may not get as nice of a premium. I may not get as much money, but on the shares themselves, I would be, you know, selling at a price that was higher than what I bought them for. So in this instance, the closest one is going to be 325. You'll see it changed the price a bit, right? It's we didn't get as nice of a credit. It's about half, right? Now it's 460. So that is a covered call. If we were happy with the price here, we would hit review and send the order, and then it would live in our positions here. Now, there's another way we could do this too. If you already owned the shares, you could just go into your trade tab. I'm going to erase this order ticket, clear it, and only sell. You know, so say we had 100 shares already that we bought at 322. I could theoretically click the bid here and just sell the 325 strike. I would still get that premium here, assuming the order filled. Yeah, so you can break it up too. It doesn't have to be in the same order.
Nice. And how often, how likely is that order to be filled? Or do you have to, is there some jiggery pokery that you have to do to get it filled?
Good question. I would say working off of the mid price is a really good indicator. It's a really good shot. You may have to wait a couple minutes, right? Because it's the halfway point between the bid or the ask. In this instance, we're outside of US market hours. So I would imagine if we set the order right now, most likely it wouldn't fill just because things will open up quite differently than how they closed, which all of this pricing right now, it's not moving because the US markets aren't open, and it's all based off of the closing prices.
And this is what I like about the Tasty platform, the visibility and the fact that it just puts it there really easy where that midpoint is at the bottom.
Yeah.
You know, for you to see it. You don't get this sort of visibility on most platforms.
Yeah. Yeah.
You're kind of like, you know, hoping that some, you know, and just placing the review and send or the place deal with no visibility in that area. So you're going to show us the, you're going to show, this is a cool hat. Is this what you use most of the time? Because I know that the Tasty platform has some pretty cool smart buttons as well.
Yeah, I would say I like table mode. This is probably the best place to trade just options as opposed to stock. Stock right now has some different little, you know, some other cool tools. So we said Tesla too. So say if we wanted to like look at stock instead, we could go to asset type here, still in the trade tab. I'm gonna hit shares, and then we've got some cool different modes here. This is a new one, grid mode. And you can trade off of a chart. So there's definitely flexibility for sure. If we wanted to just look at the charts and not trade, I could uncheck that box.
Nice.
Yeah. I don't know if that answered your question.
I also really like, lots of people here know that I have extreme astigmatism, and so I can see until I get like multiple glaring lights, and then have you ever as a child played with a sparkler?
Yes.
And you see the lines stay there? Yeah, so I have that strange thing when I have like crazy lights or white background doesn't work for me, so I love the dark lit mode.
For those of you who do like the white background, you
can
do that too. Yeah, we've got a light theme too.
Change it. So if you go back to the main page.
Okay.
So where you have, you know, the top bit where you look at different strategies, is there a mode where, I've seen this in a training module that I did. Let's say you're new to this, right? Like many of our viewers are. I'm fairly new, and I kind of think, well, I want to try and put a vertical on, but I'm not quite sure where to put it.
Yeah.
Is there a button I can hit that kind of by default on, let's say, Tesla? It then tries to put it where it is likely to go, and then I can then tweak it?
Yeah, that's a good question. I am a bit more manual. I like to go in and hit the bid and the ask. I like the control or something. I don't know. But say like I'm
like that too. I'm very manual on the you know, like if it's on the IG platform, I like going back in and then tidying up what I call housekeeping.
Yeah.
And tidying up my entry and my exits, and I like to kind of know how it's going to pan out when I get out. Right? So a bit of a control freak in that respect. But so how does it work if, let's say, you're new to this and you want to try out the default, you know?
Great question. So say this is already a long call vertical here, but it's gonna take you, if we hit the blue arrow, to the closest like in the money position. So say we didn't want to do that. Say we wanted to pay a little less money, you know, get a little bit further out. What we would do is we're going to click to select. We'll do this one leg at a time. And you should see it should be selected in a different color, and then we will just move it up. We're gonna go down because we want it to be less expensive in this example. Similarly, I'm clicking to select here, and then I'm just gonna drag it down. And yeah, now this is a little bit less expensive.
Nice.
And then once you hit review and send, are there any more checks, or does it just?
So review and send. We probably need an error message, yeah. But disregard that. That's not going to happen to you. There's not enough money in the account. But yeah, you're gonna.
Just arrived, and we already dragged her and placed her on set. You can't see it, but there's a ball and chain about to be attached here. Have you unpacked everything? Help me. Have you unpacked everything yet, or are you just still in?
Mostly. I still have to get a couple more hangers. I brought too much clothes. It's actually absurd the amount of clothes and shoes I was able to shove into 3 suitcases.
Wow.
And I also brought a year's supply of contacts. So, yeah.
Our contact lens market here is pretty competitive, right?
No.
Ah, well.
I do.
I will give you the hack.
Give me the hacks. Yeah.
We've got a few minutes left, but so good to have you back. That was amazingly super easy to understand. Thank you for showing us that.
No problem.
And then we'll try and go through some of the other cool strategies. Please put them here on the chat if you want Jolie to show us other strategies. Don't forget to hit the like and subscribe button if you want to also see Jolie and Laura back, because it'd be great to have them on board. I love these guys, but it gets a bit lonely just being Ange here.
Sure.
On my lonesome, but I've got everyone on the chat. Arsax, Jessie, thank you so much for being on line as well with me. Quick question, what are you up to? Whilst the summer, this is really special, Jolie.
I know.
You have come at a time where I have never seen the weather this good ever in May. Ever.
Yeah. Well, traveling within the UK, into Europe, all over. I think I'll go to Wimbledon and just wait queue.
Yeah.
Or just wait for people to leave.
It's part of the experience.
Yeah.
Right?
Yeah.
Are you also going to do, some of the outdoor concerts, the
Sure. Twist my arm.
Glasgow? Are you into, big live concerts?
Yeah.
Wellies, muddy wellies? Trader friends, if you have ideas for Jolie, who has not seen any of the UK at all, please bang them here, slam them here on the chat, because we would love to get her onto these things at Royal Albert Hall.
Rex.
Yeah.
Yeah.
There you go, Eric Jones, Glastonbury Festival. I would love to go, but Eric, the mud
Sure.
puts me off.
I understand. Yeah.
The camping. Speaking of which, I just want to put this up because just to show you how amazing our viewers are. Not only did they remember you from the first time you were on with us, but here we are. Monkey Man's finally got the prize that I sent out to him. He's one of our clients and loyal viewers as well. And that is the collector's item, the IG cricket bat, because we sponsor both men's and women's cricket.
And I definitely know what cricket is and how to play it. No, it sounds awesome. No, I want to go to a game. I don't know. I just don't know anything about it. No. I can't wait.
Just think baseball, but it goes on for 5 days, so you have 5 days to drink.
Amazing.
Right?
Yeah.
Yeah?
Yeah, it sounds
I can boil down the rules for you. I'm always up for a hack, and I can boil down the rules for you.
Please.
So thank you so much for coming on.
Thanks for having me.
Yeah, and we'll have Jodie next week. Please, Monkey Man saying thank you. Over there, Reading Festival as well is another big festival.
Good to know.
We'll get her on all of that, and we'll see you bright and early tomorrow.
Recession calls are dropping like flies. It's Tuesday, May 13th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Elise Spivak in San Francisco, Dylan Radigan in Milan as we take you through the rest of the trading day. Futures market closes at 5 p.m. Eastern Time. If you're joining us on the platform on tastylive.com, welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this continued rally this week in stocks. Stocks are now positive year to date in the S&P 500 and the NASDAQ there today. Russell's now up over 20% from its lows. It's a bull market, I guess. Bonds are melting down at the lower end of the curve, or longer end of the curve, I should say. CPI report comes in a little bit weak today, but it does not do much. Fed cut odds for June and July continue to melt away as well. Gold, it bounces back a bit, but silver and copper, the two growthier names, they are up, which reflects that strong standing we have on the sector rotation today for equities, where it is all growth and growth across the board, through and through. You make your way into the world of commodities outside of metals. Oil is up as Trump is in Saudi Arabia talking about plans to invest in the U.S., $600 billion investment coming our way. And of course, in the world of currency, the dollar is down everywhere, which may throw some people for a loop, myself included. Ilya is going to talk about that. But Dylan, let's start with you first. 5,900 in the S&P. So where we were at the end of February, it's where we were basically at the start of the year. What have we learned in 2025 with stocks now unched year to date?
You'll fade the tariff, baby. Fade the tariff and fade Trump.
Fade Trump. Is that the lesson here? Why do you say fade Trump?
Because he likes to draw a lot of attention to a big, scary idea, and when you take it seriously, it affects the price of things. And he's just using the big, scary idea to create an attention generation machine that will last for months until every last deal gets done, but it has nothing to do with actually getting a deal done.
Ilya, it sounds like Dylan thinks we're back in the mindset of the market in January and February, when it was the boy who cried wolf.
There's a lot of logic to that. I think it makes a lot of sense.
Can you explain why?
Well, we have a 90-day cliffhanger again. And what did we see? I think the GDP numbers for the first quarter were particularly instructive. What did they show us? Yes, it was a nominal contraction, but it wouldn't have been one. It would have been just a slowdown. And let's not get it confused. Growth slowed in the first quarter. There's no question. But it would not have been a negative number were you not to have had a massive surge in imports as people were front-running the tariffs. Now, mind you, this is happening before April, before Liberation Day. This is just, we're noodling around renegotiating the USMCA at some point into February. But this already becomes a dynamic in January because the markets, with the start of the new year, know that tariffs are coming because they know who's about to come into the White House. They heard what was said on the campaign. Obviously, there would be tariff hikes of some sort. And so there is a front running of that at a huge scale in the first quarter GDP numbers. Now we have a 90-day cliffhanger with China. So we have a window to continue to stockpile. What's going to happen? Another surge in imports, likely. Another huge outlay on inventory, likely. And then the real question becomes, and this is why the retail sales and the consumer confidence numbers are so key this week, does anybody buy that inventory? Is that inventory a bad investment?
Or how many days or months or years does it take to clear it, basically?
That's right.
Hopefully not years. But
that's right. If you have a falling appetite for consumption, if consumers, as they did in February and March, look at all of these shenanigans more with a kind of attitude where they throw up their hands and go, this is really uncertain. We have no idea what's going on. It's all very fungible very quickly. It's all very volatile. We're just going to hold back here. And that's what you see in the University of Michigan consumer confidence numbers, in the Conference Board consumer confidence numbers. You see it from the business side in the PMI numbers, no matter which version of them you look at, S&P Global or ISM. It's all over the board in the numbers, that the volatility and the fungibility of policies creating uncertainty, and that's a dampening effect on consumption and on investment. And so when you set up another cliffhanger, you basically go, okay, well, we'll run the first quarter again. And then if If consumption then doesn't pick up, because in the first quarter it was the weakest in almost 2 years, if it doesn't pick up, well, then you're left with basically businesses having made a bad investment by stocking all this inventory.
Once more, I think that we've learned, just like we did in Trump 1.0, that this isn't a trade war to remake the global order, to reshore manufacturing. It's a trade war to trade more, right?
Yes.
The United States wants Chinese consumers to buy more American crap. And Trump's worldview, American consumers have been buying enough Chinese crap for years. And we want to rebalance that out. We make some of this stuff and you guys purchase it now. And ultimately, hopefully, that means some jobs along the way.
That was the story, by the way, with the USMCA version of NAFTA. It ultimately was just a broader trade agreement. Really, the only difference between the USMCA and NAFTA is that it covers more stuff. So actually, you got more free trade out of it, not less.
More free trade out of it, not less. The market seems to be sniffing this out, that we are through the deep, dark woods of will there be a harrowing recession that ultimately drives the global economy into a ditch from which it may not recover for years and years and years because you enter that 1930s trade spiral. I can't help but think that oil is probably one of the better indicators that we have in this market right now, that we should be feeling a little bit more optimistic about stocks. 63.25 here. Dylan, you've been very clear about how the market was too bearish on oil, too bearish on this whole darn thing. It's up about $5 over the course of that mindset that you've been taking here. So what's now the play in oil? Is this thing still going to run?
I mean, I don't know. Because I got in there a few days ago, as we know, we talked about this, and I do feel pleased with the moment, but I'm also too old and too tired at this point. I've been through too much to get too pleased because I've seen what happens. But, anyway, the oil thing's working at the moment. And I don't know if I would get involved new. I have these, my relationship with oil is on like moments of fade, of divergence. I don't know, I have a daily opinion on this, and I'm not sure what you would do at this price point, but I do think that to the degree to which Trump gets discounted out of it, that the Trump policy-making apparatus is deemed to be disruptive, but not catastrophically disruptive, it's all both clears the way for robots in the world. AI Superglide is ready to go here. I think it's the first word that wants to sneak in after tariff leaves in the news cycle. And I think that and trade war to trade more, it means more global logistics plus more electricity. You can talk yourself into a crude position pretty quick. Just on electricity and logistics.
Right. I mean, Ilya, for someone who thinks that, recession is...
Although electricity is not so much crude at this point, I suppose.
No, but it's all the same, it's all part of the same story.
But even as a transport fuel, I mean, listen, the trade deals are good in favor of transport activity.
Well, the shipping stocks have been exploding here the past few days, Ilya. They have a...
That would be the front running. Expected to go again for another quarter. I mean, that lines up.
Well, you talk about it. There's data out there showing that the cost to book slots on some of these ships has basically doubled overnight.
Yeah.
So if you want to get goods from China right now, it's twice as costly as it was this time last week, in part because there's so much demand now, as you point out. So
that's right.
I guess with the CPI report today, Ilya, I know it comes in weaker, but bonds fall across the curve.
It's a very interesting response here.
Trump's talking up the stock market, and it's like he does not give a hoot about 4.5 on the 10s or 5% on the 30s anymore. Like that policy Trump put is out the window.
We're gonna find out here, because what seems to have happened here is that the market took the slightly weaker CPI number and said the Fed can cut rates later, not sooner, which is seemingly counterintuitive. but it isn't in context. Because once you start to unpack the inflation numbers, first of all, the core stays unchanged, 2.8%. And that's the bogey for the Fed, because obviously they have no agency over global food and energy costs. Their thing is they need to manage what they can manage. And the core stays unchanged. Moreover, when you look at the internals of the core, it was services that weakened a bit. Goods went from a negative contribution to a positive one, but it's barely a rounding error. 0.02 percentage points from goods in this CPI number, and 2.18 percentage points from services. So services is the weakest in almost 2 years, but it's still the biggest piece. I think the worry was that the trade war would give you massive goods inflation because the tariffs would somehow register as directly a sticker shock. Mm-hmm. And you're not seeing that in these numbers. And so the markets, when you look at equities and you look at what Fed funds futures did and what the bonds did, it all looks like, oh, back to normal. Back to maintenance cuts. 50 this year, 50 next year. In fact, the markets are a little bit lighter. They're at 88 basis points, whereas the Fed is at 100. So the markets are now slightly less dovish than the Fed over the next, sort of this year and next. And you look at the timing, it's a September cut now. It's not July. So the markets seemingly look at these numbers for CPI and they don't say, oh, it's weaker, the Fed will cut sooner. No. They go, oh, it's weaker. We didn't get the big scary tariff thing. This is more normal. These numbers are normal. They're not crazy. The risk that the tariffs were going to massively skew this, that didn't show up here in these numbers. Which, by the way, given the stockpiling in the first quarter, makes sense. So the question now is, are we just pushing this downwind? And if you look at what the bond markets have been telling you, they've been screaming that the Fed need not worry about the inflationary influence of tariffs because break-evens have been going down, not up. So the way this resolves may well be, well, consumer confidence is falling apart, consumer intent is weakening, nobody really wants to outlay because they don't know what's going on, and you just get, again, a regular recession, just a regular business cycle rolling over, but not some sort of a crazy, scary thing. And so the Fed is not in a hurry, but because the maintenance cuts are on, gold holds, dollar sells off.
Well, we see over the past week and a half, basically 2 weeks, the market's taken more than 50 basis points worth of cuts off the board just through the end of this year, which is fairly meaningful. We're currently in the 4.25 to 4.5 range. So
the panic has clearly unwound.
It has unwound. This is the lowest close that we've seen in the SR3 Z5 contract since late February, when really stuff started to hit the fan. Dylan, so much of the market in 23 and 24 was defined by the attitude that if the Fed can't cut, it's a good thing. Are we back there? That if the Fed can't give us a June or July rate cut, it must mean that the economy didn't go into the tank, so not a problem?
I mean, that sure is the appealing path to walk down. I mean, and it seems to be the most logical sort of first explanation for why no cut in July, let's say.
Inflation a little bit stickier.
The economy's more the resilience, the absence of inflationary pressure from supply disruptions, plus the resilience and strength of the American labor market and the American consumer have created a situation where we need not cut rates this month. One of those.
You know, it creates this interesting dynamic where now over the next 70, 80 days, I mean, some of these other country tariff pauses, right? Those are going to lapse before China. There's a small likelihood, I don't know if this is actually going to happen, but you could have a window of a few weeks where there are higher tariff rates on other countries than there are on China. which would be somewhat ironic. What we're seeing here, though, is, at least for the short term, Elliot, we're through NFP, we're through CPI. The next Federal Reserve meeting does not come down the pipeline until, what, June 18th?
Yeah. There's time to kick the can down the road. It seems like President Trump was looking at the polling numbers around all this stuff and decided it was a loser issue for him. He passes it off to Scott B last week, who immediately declares victory over the weekend, like trying to get this behind us as soon as possible kind of behavior. This is the risk now, as it were, right? Because if what matters ultimately is consumption, the question now is, has the damage been done already? And is and what that damage is maybe not what the panic was in April, but that doesn't mean that the damage isn't done.
But don't you think that the equity markets are showing you that they think the damage is very limited at this point?
Yes, of course. Absolutely. And this is exactly what now presents itself as the key question. If what we're solving for after April's scary spook is there isn't a currency crisis and a sovereign crisis in the United States, well, then solved. Clearly. At least that's what the markets are saying. They're saying that was not a thing. That fear is unfounded. But if what we're solving for,
so now you're back to a growth debate, and you're pretty optimistic.
That's right. You're back to a growth debate, and after this CPI data, you're absolutely optimistic because the CPI data shows you a more normal economy, not some sort of a crazy spook show like what the GDP numbers alluded you might see. And so you now then look and say, how consumers embrace or don't embrace all of this is what this hinges on.
But
because in the first quarter they were defensive.
Will be tempted to come in and sort of hornswaggle the deal at some point and make the whole thing collapse. Like
it's possible. You never know.
At least once.
One good,
just one time.
You never know.
Gotcha.
Take a look, Chris, at the weekly S&P, because on the weekly you can really see sort of where you are in context here. Without a lot of the noise. So look at what we're testing. There's the range. That's kind of the early December into mid-February. Let's see what this guy does to the data range. And then the data sours and there's a conclusion to say, okay, well, what he did to the data wasn't good. Sell it. Now, we're going to find out where we're going to land on it this week. And on the daily chart, the answer today looks like it's going to go and test those highs again. But if you get a weak retail sales number this week that tells you that actually, forget the noise, forget the atmospherics, consumers don't care if Scott Bessent had a nice meeting with the vice premier of China. Nobody's paying attention. What they care about is, are they going to go buy a washing machine or a car in this environment?
Oh yeah, I got a tomahawk steak on Sunday, in part because I knew that the market was going to be green on Monday because of the trade deal.
Yes, but
I was changing my consumption habits.
Yes, but the three of us are degenerates, and that's different. I wouldn't say we represent the average.
But I mean, what to the degree to which they did the polling, they're like, Trump's not doing tariffs anymore. We're going to run tariffs, clean up the mess with Scott, and Trump's going to run a different messaging starting, 2 days ago or something.
Right.
I mean, that in and of itself seems to be a signal.
Well, here's one thing that I think really kind of puts this in perspective. If you want a sort of real-time tally on this, you can look at the President job approval polling, and Real Clear Politics does a real nice average of the polls, so you can get a sense of how things have evolved here over the course of, let's say, the past several days. The president's approval rating has gotten worse, not better. And so that tells you that maybe, and again, this is obviously, it's skewed by what the average is skewed by whatever polls have actually come out in those days. So, take that with a grain of salt. We've only had a few,
but wouldn't that
released,
validate the idea that he wants to distance himself from this whole mess?
Maybe, but it also tells you consumers aren't looking at these headlines and saying, okay, cool, let's go buy a bunch of stuff. It's over.
Yeah, I am.
Well, you are because again, we're not exactly the average that's getting polled in these surveys.
Well, it was one of the things that I bought today. Some NASDAQ calls for the all-time highs.
I was looking today at buying some SPY and some Q verticals, but vol has become so cheap that the pricing has become a little funky.
I don't see it in the chat here, Elliot,
tomorrow.
But the fact that both of us are throwing in the towel here on our recession call, after what's been,
I am not throwing in the towel on the recession call. I am trading the price action. If you're right at the wrong time, you're wrong.
What's fundamentally different with the price action today versus yesterday?
We've broken back into the consolidation range and undid the bearish breakout that happened in the run from mid-February to mid-March. The price action is fundamentally different.
I think that's fair. Dylan, I look at these charts right now, I can't help but think one of my long-standing heuristics is that when you move outside of a range only to return into it, you go and try and test the other side. It's a false breakout.
Yep.
So we clearly have established that this is a range worth watching in recent weeks and months, right? Yep. November, January, we break it, flips and becomes resistance in March.
Yep.
We're now back into that range. First steps 60-15, 60-20, and then 61-75 again.
Well, and mind you, if I'm buying call verticals here, it is against the existing puts. I am not covering the puts because the puts are at max loss. There's no reason to touch them. They've hit their allowable loss, which was purposefully kept small because anytime you're shorting the stock market, you're fighting a market that doesn't want to go down, just in general. And so it's a dangerous proposition, statistically speaking. You're looking for momentum. You're not looking for a grind. So you size small. I did that by using ETFs rather than futures, so SPY and Qs rather than even MES and MNQ. And I locked in relatively small loss. If this stuff expires worthless, that's not a easy thing to swallow per se. It's about an equity loss of about 4%, but against a year-to-date gain in the double digits, it's not the end of the world.
Mm-hmm.
Next trade.
Dylan, the sector performance here, as noted earlier, was strong to quite strong today. SMH, your top performer, up 3.43%. XLK up 2.16%. XLY up 1.32%. Among the losers, of which there was a handful, we'll call it 9 of the 25 underwater. It's healthcare, it's staples that are two of the big ones on the downside here. So the sector rotation continues to hold up. Obviously, a big part of that consumer discretionary name here is Tesla itself, which is now up to 334. Dylan, I was trying to talk you into looking long Tesla last week when it looked like we were getting out of a potential bottoming pattern here. Is Tesla still valid at these levels? Should we keep chasing it higher?
I think for sure, I think no question, all these names are valid at any price almost. I mean, if this goes, meaning the robot future, whether it's Amazon, Meta, Microsoft, or these guys, Tesla, they're all better bets than most things, even Apple.
Even Apple. Ilya, I mean, Tesla right now is taking off like a rocket
But
ship.
Tesla's in a good way. Sorry. I mean, I think Tesla's in better shape than Apple, for instance.
Mm-hmm.
Elon seems like he could get the best of both worlds for the next 3 to 6 months.
Yeah.
He's stepping out of the spotlight, stepping back from Doge. Tariffs are backing down, so that pressure's off.
He got his way there.
Do we think that the administration is not going to continue to be helpful and supportive of an Elon Musk who is still serving as a part-time advisor 1 to 2 days a week? But he's not going to be
I
the
think
face
this
of
is
it.
helpful. The fact that we're unclenching on tariffs is helpful. That is already kind of a pivot his way. I mean, he wanted
And the fact that he's less visible as an icon of the Trump presidency.
Yeah. He wanted this.
Doge, as it was stated, look, we three have talked about this on our off air. I think Doge was just a power play to consolidate power, right? But the stated goal was to trim the budget and, stop all the deficit
None
spending.
of which is really happening.
None of which happened, which accounting for the errors in payments and mistakes that were made. Doge basically saved no money. And now with the new GOP, $150 billion at the high end, the more conservative estimates where the money can actually be tracked with verified receipts is about $60 billion in mismanaged funds that they found. Again, not fraud. Not fraud, because fraud's illegal and there's yet to be a single lawsuit. It's just money that people don't like how it's being spent. 6.2 trillion. That's the new amount of debt we're adding with the latest House GOP bill, Mr. Radigan. Meet the new boss. The same deficit spending lover as the old boss. So we have tariffs off. We have continued government spending at nosebleed levels that equate to World War conditions, just like
And
we
you
did
got
on
tax cuts brewing.
Ilya, we have tax cuts brewing.
Yeah.
Which deficits up, taxes down, tariff rates, they're higher than they started the year, but directionally, the impulse from where they were on April 2nd is lower.
Yeah.
This all kind of seems inflationary for asset prices again.
Unless you crush the economy.
But where is there evidence of that?
We're going to have to see. And again, it's why I think the consumption
outside
piece
of the
is so
first quarter traction, I guess.
This is why I think the consumption data this week is so important. Mm-hmm. If you've scared consumers to a point where they've decided, you know what, I am going to put off significant spending until this Michigas blows over. If that's the logic, if it's basically like, well, I was going to buy a car and now I'm not. I was going to buy a new washer and dryer and now I'm not. I was going to take a vacation. Now I'm going to do it driving distance versus a flying distance thing. Like, if people basically tighten spending in response to all of this and go, you know what, I just don't know, so I'm going to back up. And the same happens with businesses. They go, you know what, we don't know. We're just going to back up. We're not saying we're going to fire anybody or slash anything. We're just going to not do more. We're going to back up. And
but if you're a consumer,
that's a risk.
Here's the thing. Here's like my only side of this. If I'm a consumer who's been in the know enough to change my spending habits because of tariffs over the past few weeks, Dylan, then I'm also a consumer who's in the know to know that tariffs this week may have just been obliterated.
Unless you didn't change your spending because of tariffs. You changed your spending just on general holy moly grounds. And you did that going into this year.
Grounds? What are the holy moly grounds?
My 401k, my whatever, just the market fall in April and March, all the April selling.
And in the first quarter, you get the weakest consumption in almost 2 years, right? How does that happen? Unfortunately, GDP numbers don't unpick you the month by month contributions to the quarterly in an easy way. But clearly there's a response to, whoa, there's we're driving down the road faster than it maybe wants to allow, and now the car is kind of swerving and kind of hugging the cliff edge a little closely here. Hey, take it easy. Take it easy. That seems to be the sort of read through, and that's before you get to April. So if consumers basically decided going into the first quarter and in the first quarter that all of this commotion is unwelcome, not necessarily tariff related. It's just general, wait, what's going on? We're doing what? Whoa, okay, all of this is untoward. We don't know that, obviously. But we do know that they retrenched in the first quarter before the meat of all of this. And the dust has only been kicked up taller. And the fog has only become thicker since.
I guess the shtick I'm working at, and this totally comes from everything fear or anger based for my trading. In this case, anger, because I missed the move higher. So now I'm trying to work backwards and paint the tape with my justifications for why it's still going to go up. So this mental exercise does press on. Gold up, Bitcoin, Ethereum ripping, bonds down, stocks up. That's a really interesting mix. I'm off the whole buy America, sell America thing. That's over.
Seems to be.
So I'm searching for a new North Star, kind of like a new theme. And if the theme here is deficits up, government's going to have to issue more debt, I think we may be really wrong about bonds as well.
Possible. Very possible.
Like, we probably should be expecting yields to take a ratchet higher to by another 25 or 50 basis points. And I think the 10-year yield is perhaps what's driving me in that direction. If just putting together all the puzzle pieces here and then looking at the chart, it's been moving in these bands over the past several months, like 4.15 to 4.5%. And then there's another one that's like 4.5% up to 4.8%. We're on the cusp of crossing through 4.5% again. And there is a world that makes sense to me where it's like, okay, why are yields going up? Because you're going to get the knock-on impact of the tariffs, which is a one-time bump. But if this is an economy that's functioning like 2022 or 2023, what kept the economy afloat? Why didn't the recession materialize? Because we were spending money like drunken sailors, war-like spending. And yet we're going to be doing that still with the latest budget. There's no big pullback in government spending, which fine. It's not really an issue that gets me out of bed. Dylan, I don't know any politicians that have really won an election running on the deficit, despite how it's been tried for a number of years.
No, but you can run on leveraged growth, which is what a deficit creates.
That's what that creates, right? So higher yields, stocks that can stay up, crypto that is rallying, nosebleed level. Dylan, I asked Tom and
less rate cuts, less, and a bond going down and rates coming up at the long end.
Is this?
I wonder if it's
it just feels like this is
stronger oil.
Yeah, and stronger oil, which feeds into the growth and inflation-ness of it all, and that would be good for higher yields, particularly at the long end of the curve. Where
more activity, more transport and logistics activity in general.
This feels like it's been a really quiet rally in crypto over the past few weeks. Like, it's not a rally that's loved or watched or perhaps even has that much retail participation right now. People, of course, were buying hand over fist when it was last above 100K in January and February, and now no one's talking about this. Ilya, I feel like, I know you're a bear, you don't believe in it, but the fact that we've gone from 80K to 105 in a lark with barely a peep from the Bitcoin maxis, this feels a little bit different this time than it did, say, post-election. Like, this thing's got more legs than it had previously.
Maybe. You have a weaker U.S. dollar, which really is the only impetus you need here. I mean, is this about the sort of inherent characteristics of Bitcoin as an asset class distinct from overall risk? No. This bounce in Bitcoin is almost to the day the bounce in the S&P, just at double the vol. So the S&P has increased just north of 20%. This thing has increased just north of 40%. But the lows are exactly the same. The dynamics are exactly the same. The moves line up almost perfectly. So what are we actually looking at here? Are we looking at some sort of intrinsic Bitcoin thing as separate from general risk sentiment? No. Not really. Doesn't seem like it anyway.
Dylan, do you have a constructive view on crypto here? I know it may be late, it's 105K, but global money supply keeps going up and governments keep spending money like it's going out of business.
I mean, I like your interpretation that the second time around here, like let's assume Trump's a crypto president, or at least fashioned crypto president. Has all those kids from Silicon Valley running around doing, technology money things. Falls apart, and then sort of Bitcoin finds a reason to be through the tariff wars, which revolve around risk on, risk off stuff with the currency in the US, and also enough of an institutional base at this price point to sort of demonstrate some version of integrity within some, granted 40% is a hell of a range, but within some range. But I don't know if that indicates that it's going to go higher at this moment, or so much as it is just validates that, trades around 100. Trades 90 to 110, 85 to 1, whether this is just sort of where it lives now. Or, because I feel like you're asking, is this where it lives now, or is it setting up to have a rip? And I wouldn't have venture a guess on that. But my impulse is that this is an establishment of a place it likes to be, more than it is an indication of some place where it's going.
Ilya, the technicals, it's a range between 74 and 110. We can just do the math there. That's 36K. So we're talking about $146,000 price target on the other side of a potential breakout here. Mm-hmm. Let's work backwards from that. What has to happen over the next few weeks for Bitcoin to get it to $146,000? What's that world look like? What's happened? What's in the news? What's the data? What are the signposts that we should be looking for if this thing's going to continue to go up?
Obviously, you have a very clear range top there. You've just outlined it at 110. So the first thing you need is a technical breakout that tells you that the high that held before isn't going to hold this time. This is not because technicals are some kind of a magic spell that tells you where the markets are going. It's just the basic architecture of you previously had a high. For whatever reason, you decided that the market cannot go above that level, and you tested it multiple times. If you then go above that level and hold above it, well, then you can see with the naked eye, something here is not like it was before. We've reset to some sort of a different level of thinking in this market. For whatever reason, doesn't ultimately matter why. But the architecture of the price action then tells you something different is going on. That you had a high, you tested it multiple times, you couldn't get over it. Now you have, on a closing basis, let's say, that becomes fundamentally a different market. Okay, fine. So you have your momentum indicator. The response from the dollar to CPI today was very interesting because the CPI was a little bit weaker. That cheered stocks. Fed policy expectations actually got less dovish, but the dollar sold. So why did the dollar sell if the Fed policy expectations got less dovish? Well, because the markets clearly were not cheering that the weak CPI made them more dovish. Stock markets were clearly cheering that the numbers were normal. And the sense of urgency was taken off the Fed. This is not like the Fed needs to firefight yesterday. No, this is like, okay, they can wait. This is fine. Everything's okay. And that, in some sense, unchains the Fed. Because if the Fed for the past several months has been sitting here going, we don't know what's going on, our hands are tied, this CPI data says regularly scheduled programming here, gentlemen and ladies. No need to worry. Everything is as you expected. Your maintenance cuts are on. That's it. And then the dollar sells off because the Fed has basically been taken off of emergency rate cut potential in the event that the tariffs suddenly give you an inflation shock. So dollar keeps selling in this environment. As long as that continues to be the story, that's helpful for Bitcoin, just because it's priced in those terms. Nothing much has to happen with Bitcoin itself.
Dylan, if we're looking at Bitcoin at a new high and the NASDAQ moving up to a high again to help my revenge trading work out well, what kind of headlines will we see or will we not see over the next few weeks? What will Trump do and not do?
What will Trump do and not do in regard to what?
If we're going to wake up in a few weeks' time and the NASDAQ's at 23,000,
a
new
bigger
all-time
number.
high. Yeah. Mm-hmm. What will have transpired over that period of time?
Well, you'll get a preview. You'll start to get leaks and a preview of a tax package that people will like, even if it doesn't happen. In terms of vibes. And then you're going to have no tariff talk, and you have a jump mega budget from the government with deficits for as far as the eye can see. Full money, where everybody gets money. Which, I mean, I think the thing is it's almost on the one hand like a pick a monkey or throw a dart. Like assets will be worth more in that world. Anything you own. And then I guess you can say the game is where the most leverage is either within an index or name or cluster of named. And I feel like you're sort of tempted to be like, maybe Ethereum is going to have its moment here because you're eyeballing it. And maybe it is. Been a long time coming.
Elliot, that tax plan looks like it's going to help people like you and me. My congressman's out there fighting for a cap above 30K, which if, go to 30K, that's just you and I are getting a tax cut in the neighborhood of what, like $4,000 a year, $4,400 a year. And if they uncap it could be several $1,000s more.
Well, and by the way, if a SALT deal isn't done as part of this thing, then the tax cuts expire, and then we get an even bigger SALT deduction because we go back to what it was before. So you and I make out here because we live in high tax states with high municipal taxes, and it looks like people want to give us some relief either way.
I certainly appreciate it.
Yeah, thanks, everybody.
I will do my American duty, my patriotic duty to take that money and put it into the stock market and push this up to highs. Right. So, yeah, no, the tax plan is.
So, I mean, I guess, like if you were going to just set up a straight shooter's delight, what do you want to be? Where do you get your leverage, Chris? NASDAQ verticals?
NASDAQ Vert is what was put into the tastylive follow account today, long the 23K, short the 2350. It's a 9-to-1 risk to reward, risking $900 to make a little over $9,000. It's 48 days to expiration by the end of June. So we're talking about 6 weeks to travel another 1,500, 1,700 points or so. I think that's totally possible, particularly because this is all within the window when theoretically Scott B is handling the negotiations with his Chinese counterparts, and Trump is going to let sleeping dogs rest, hopefully. But a market where I still find the most interesting perverse incentive that's underlining all of this is that in the short term, we still have a market that has been tilted net short. The CFTC COT report that week technically closes in about 9 minutes and 10 seconds time. And we're going to see the data for up-to-date positioning come this Friday at 3:30 Eastern. But before we had yesterday and today's moves, before we had all this trade talk, we were looking at a market where people in the futures were still net short. And speculative positioning tends to be something that operates contemporaneous alongside price action. So as the market goes up, traders tend to get long. As the market's going down, speculators tend to get short. They're trend followers. So you have all these people who have been short, staying short, not budging off their shorts as the market's climbing and climbing and climbing. And now, not tomorrow, but the day after, we're going to hit the halfway mark for 2Q. And if you were an institution or a hedge fund that bailed in the first week of April, Lucy, you got some splaining to do, because stocks are back unched, if not positive year to date. So Dylan, I think there's this really weird incentive right now to push things higher, to chase, right? You have 6 more weeks to make up for the first week of April, particularly if you bailed.
You think the NASDAQ vertical is the best place to for a capital efficient, leveraged long to that idea?
I do. Last week, when the news of the UK trade deal was coming out, I tweeted out, if it's not EU or China, it doesn't matter. We don't have an official deal with China. China's attacking the UK trade deal with the US, but it's clear that we're on an off-ramp right now. This is a market that didn't fall today when Xi Jinping last night said to the world, we've learned that bullying leads to isolationism. That's a direct attack against Trump. Trump didn't say a peep today about being insulted by the Chinese leader like that. Maybe it's because he was on a plane. But I don't know. It feels like Trump's moved on for the foreseeable future. And now that we're in peak shipping season and peak ordering season for the holidays, he can let this go. If he wants to kick the tires on this again in 2 months, in July or August, wouldn't that work out nicely with the seasonality, Ilya, where it seems like every year we rally, April, May, June, July, and then August 1st comes, go away until October 1st? That, feels too perfect.
If you, and again, this is why you got to look at the consumption numbers. If you make all of this contingent on the market is following the optics, then clearly there's absolutely no question that the market is telling you the optics are much better today than they were yesterday, that they were better yesterday than they were last week, and that they were last week than they were the week before that. Very, very clearly, the markets are telling you the optics have improved. The question now is, you got the sell-off started not because of optics. You got the sell-off started because of real economic data telling you that things were cooling off in a worrying kind of way. None of that has changed. None of that data is any different. Now we have to see if, in fact, what has been done to business and consumer sentiment is like markets, driven by the optics, or something more insidious. And we just don't have that answer. We don't have the data to tell us that answer. But tomorrow, the day after that, we have some really key numbers that are going to help to answer that question. And in particular, it's the retail sales report, but I would argue even more importantly, it is the University of Michigan consumer confidence numbers that come out on Friday. If those consumer confidence numbers are bad...
But now you put yourself in Chris Vecchio's chair, because he's sitting here like a fool. And he's a very optimistic fellow with a very, positive worldview. And he just watched this thing jam straight higher on him. He had nothing on, or not enough anyway. And so now he's sitting here looking to figure out why this thing's just going to go hog wild for the next 6 weeks.
You might be right.
And you're in there trying to do dental floss on the Michigan confidence number, looking for the problem. Maybe you just need to relax.
I am not suggesting that this thing is not going to rally back to, let's say, NASDAQ 22.5.
Okay.
Because that's exactly what the price action here looks like. But that does not mean that we have a buy in July and
buy through July.
Buy through July kind of dynamic here, because we just don't know. We just don't know. It's why, trading the price action today, I was actively sizing up buying call verticals to reduce my short delta exposure. Because
for good reason.
The put verticals at max loss, it's basically just dead money, and there's enough duration in it that there's no point to change anything. You just leave it, because worst case, it'll stay where it is. And if you are also then holding some call verticals going higher, well, then you eat away at.
But how funny is it if the next story is not even AI, but it's just
this is exactly why I'm skeptical.
What if the next story is just American deficit spending?
This is exactly why
and tax cuts.
I am so skeptical. Exactly why. Because you look at this rally in the stock market, and what it looks like, it doesn't look like the triumph of AI. It doesn't look like the super glide. It just looks like we almost took a sledgehammer and hit ourselves in the face, and then by some miraculous luck, we missed.
So this is back to neutral.
Yes. And now we have to find out where the economy is, where it really is.
We had the Zweig breadth thrust a few weeks ago. I
learned about that when we started talking about it.
Yeah, so for those that don't remember, Zweig breadth thrust is when the NYSE advancers over the total NYSE advancers and decliners, that ratio moves from 0.4 above 0.615 in a 10-day span. Along those lines, we just saw another pretty good breadth signal today that just came out of this market. This comes from Ryan Detrick, friend of the show, over at Carson Research. Today, we have 60% of the components in the S&P 500 hitting a new monthly high. Very rare. Doesn't happen that often. How many times has it happened before? 16. Going back to 1980. What's the average return for stocks after you have 60% of components hitting a new monthly high in a single session? 1.4% higher on average a month later, 5.1% average 3 months later, 9.4% on average 6 months later, and 18.6% higher on average 12 months later. The hit rates are 83.3% for the 1, 3, and 6 months, and 100% of the time for the 12 months. So as we go out with today's overtime, right, CPI doesn't leave a dent. The market sells off a little bit into the end of the day, but breadth is improving here. Stocks are back above water year to date. Didn't have that on my bingo card a month ago, clearly. This has been the craziest 6 weeks I've ever had in the market.
There you go. There you have it. And with that, overtime is out of time.
Yeah.
We'll see you all tomorrow. Same time, same place, 4 p.m. Eastern, 3 Central.
Yeah. Godspeed, everybody.
For Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. Good luck trading.
CPI data comes and goes in the US, and the markets seem to like it. So where are we going now? That's the question we're going to ask ourselves here on Macro Money. This is Ilya Spivak, head of Global Macro here at tastylive. And we are going to take a look at what this CPI data did and try to focus on unpicking the details in this data to try to surmise what the market reaction here to these numbers is actually telling us. Because clearly here, the markets on the stock side liked it, but that only tells us a very small bit in the story. Now we have to go and unpick what some of these other markets did, because indeed we get a very interesting perspective here for the cross-market reaction that starts to explain a little bit more about how this is likely to evolve and what message these numbers are giving us here. So we're going to take a look here first and foremost at what were the numbers that came out, what were the contributions that the CPI data told us came from which part of the structure and what that means, but really most importantly, what the price action response was telling us. So let's begin here with the market reaction. As we said here, it looked like it was relatively supportive when we consider what's going on here with stocks. This is the S&P 500 here, just as a bellwether for overall risk sentiment. And we can see here, not only have we posted a rally, and that, of course, tells us the story already, but we very tellingly broke back through this key level of former support become resistance at the bottom of the range that was in place from late November into December, where we set up this high from which, of course, we launched a very concerted sell-off. This was the consolidation. Right here was where the sell-off got kicked off. We have now retaken that critical barrier here. And anything below it still looked like a correction within this overall decline. Well, now we look like perhaps there is a pathway from here higher back towards 6,000 and back to test these highs. So not only did the markets generally rally on the day, and did so in the wake of the CPI data. They took about an hour to digest the CPI data, then rallied. But they did this through critically important and sort of obvious with the naked eye barriers in the price action. And that seems to belie a level of conviction. Likewise, of interest, of course, is that with these numbers, the U.S. dollar weakened. We can see the dollar started the week on strong footing. This is the DXY dollar index. It's a bit of a skewed basket because of all the legacy currencies in it that have since become the euro. But nevertheless, it does give you some sense of kind of an average trajectory for the dollar against its major counterparts. It ultimately sustained the most damage against risk-on currencies like the Aussie, which of course makes sense in a kind of stocks environment that we just saw. The euro didn't do as well, the yen didn't do as well, but certainly the overall direction for the dollar here was lower off this former support become resistance right there. And gold prices very tellingly held on to their range support. As the dollar rallied yesterday, gold sold off into this range right here. And whereas the dollar held back from rallying through its relevant near-term barrier, so did gold, but on the other side. It managed to hold up without selling off through its major support here and held right there. So what was it in the CPI data that did this? Well, looking at the numbers, the headline came in a little bit softer than expected, 2.3% versus 2.4% expected. The core in line with expectations and unchanged from the prior month, 2.8%. Now, it's important to consider what these reference points are here. 2.8% is actually the lowest core inflation that we have seen in 4 years. The last time we were below that was March of 2021. So exactly 4 years in March, and the April number here was unchanged from that. The headline is actually the lowest since February of 2021, when inflation was just 1.7% year on year. So this 2.3, a welcome improvement, needless to say, but only modestly so relative to expectations. If we look at the internals here, what we find is that the main contributor, not surprisingly, still services, but also that services inflation continues to cool significantly. And to the extent that a lot of this other stuff amounts to a rounding error, this right here is getting some welcome proximity to the Fed's 2% inflation goal. Indeed, at 2.18 percentage points, this is actually the smallest service sector contribution to overall inflation since November of 2021, when it was exactly at 2%. So we seem to be looking at some welcome progress in the Fed's direction. Moreover, goods inflation, although it's flipped to positive from negative, we can see in March, goods were actually a disinflationary force here, but for the overall number, deflationary for goods. And now we've kind of flipped back into positive territory. There's not much of a difference in terms of the contributions from food and energy. Similar uplift from food March to April, similar downshift for energy for the same period. But if we look at the actual changes here, clearly the real action is happening here and here. And what seems to be the key takeaway is that the part of the economy where there is the most pull from demand, you can clearly see where the demand is, because we can clearly see that inflation is in services. It isn't in goods. Now, the reason this is here, and the reason that this wedge from goods inflation basically gets unwound as we work our way through 2021 and 2022, is what the Fed was saying back then about the transitory effects of COVID disruptions on inflation. Broken supply chains made goods more expensive. As those supply chains mended, that goods inflation got squeezed out of the equation. And what got left was sticky services inflation, mainly driven by domestic demand, including, of course, in the calculus here, the incredible burst of stimulus that stoked consumer demand, including the Fed's efforts at cooling inflation that helped to underpin that demand, including, of course, also the labor costs embedded into the part of the economy still growing, and locking those in. Of course, the service sector is by far the largest employer for the U.S. The ratio is something akin to 75-80% of employment is accounted for by services. So if ever high wages during labor shortages at the start of the unwind from COVID lockdowns were going to be seen, they were going to be seen in services with a much more significant impact than elsewhere. So we clearly see that this is where the demand is, which is why this is where the price pressure is. Price pressure and and demand go hand in hand, of course. When there's demand for a particular sector's output, the prices are going to reflect that and be relatively uplifted. Not surprisingly, of course, during the COVID years with everything on lockdown, the emphasis was on goods, not on services, because one could not partake of a lot of those services. We, of course, talk about subsequent revenge, quote unquote, spending on things like travel and concerts and all those things that you couldn't do during the lockdowns. And so there was a kind of wedge here of gorging on goods that then kind of hit a wall. And then services really took over as the dominant engine of demand. Of course, we've talked about this and seen it in the PMIs very clearly, where manufacturing has been anemic, but services strong up until the beginning of this year. And we likewise have, of course, seen that the U.S. economy was very strong last year, but that didn't spill over to the global economy, largely because it was mainly services demand, and that's serviced by domestic firms, whereas imports are mainly on the goods side of the equation. And we can see that demand, as implied by the price impetus here, is basically flat to non-existent. And so that's what makes these numbers so interesting. The weakening part of the equation here comes from, mainly at the core, and obviously this 0.7% and this 0.3 adds up to 10, and these two cancel each other out. But the main impetus here comes from that part where growth lives. And on the good side of things, any concerns that there might have been about maybe the tariffs would create a big inflationary distortion that the Fed worried would tie up its hands, that clearly did not materialize here, at least not yet. And perhaps the reason that it didn't is what we saw in the first quarter GDP numbers, where we saw massive front-running of the tariffs with a huge surge in imports, and then a parallel surge in inventories as those imports got stashed into warehouses, anticipating that tariffs would make prices go up, and so buying in excess to try to smooth out that impact as much as possible made sense. And that's perhaps why goods prices don't really reflect all of the tariff chaos that we have seen. We can see, likewise, that in the wake of these numbers, the markets actually take Fed rate cut expectations down and not up. And that's a very curious read-through for all of this and helps to explain why the dollar did what it did. Now, if you get slightly cooler inflation, 2.3 versus 2.4%, you might expect the Fed could have clearance to cut more readily. But that is not how markets interpret this. You can see, of course, at the peak chaotic period here in early April, the markets were looking for as much as 137 basis points in cuts. That has, of course, unclenched. But in the most recent days here, we've gone to just 88 basis points in cuts through the end of next year. That's a little bit more hawkish even than the Fed's own outlook, where in December and then again in March, they called for 100 basis points. Now we can see we're basically there. For this year, we have 47 basis points priced in versus the Fed's 50. For next year, 41 versus the Fed's 50. So we're very, very close, but slightly less dovish even than the Fed. This weaker CPI data doesn't do anything to change that. As a matter of fact, we're narrowly pushing out when the next rate cut is going to happen. Here's the calculus for the July meeting. We can see that whereas a week ago, a rate cut in July looked like it had better than even odds, approaching 60%, we look now and the markets don't expect that there is a rate cut that's going to happen in July. They see an over 60% probability that we don't have one. This is the current setting of policy right here. Moreover, you can see the delay in September's numbers. We got a little bit likelier chance of standstill, a little bit less of a probability of a cut as we look to September's numbers. So the markets looked at this CPI report, saw that it was a little bit weaker, and ended up saying, oh, well, this probably means the Fed can have less urgency about rate cuts because there isn't some emergency that's going on. This breakdown in April looks very much like the breakdown in March. The overall inflation rate is a little bit lower. Core is steady. There is no tariff shock here. And so the Fed need not worry. The economy is at an even keel. So there is no urgency, and perhaps we're back to normal maintenance rate cuts that the Fed intended all along for this year, well before even the calendar turned to 2025 or even before the election. Already in September, the Fed was eyeballing rate cuts this year and next year, just because inflation expectations have fallen and it's been time to move nominal rates down in line with that, because otherwise real interest rates surge and crush the economy. So that helps to explain how, even though you got inflation a little bit weaker, Fed rate cut expectations actually moved to a less dovish setting, yet still the dollar sold off and gold found support. Because whereas the Fed's hands looked tied as they were trying to figure out what influence the tariffs were going to have, now perhaps their hands are not tied. Now perhaps they can proceed with these maintenance cuts at a leisurely pace. And that's how all of this seems to fit together. But of course, the key question here for markets that until this point were very much focused on how much panic the inflation numbers would endorse is what's actually occurring under the surface beyond that story. Because again, going back to the S&P here, we did not start this sell-off because the tariffs were hitting fever pitch. That ostensibly happened earlier. We started this sell-off because the data started to show that what is happening with the rollout of fiscal policy is creating a kind of dampening effect for consumer and business confidence, and that is hurting economic growth. And we don't know if any of these back and forth headlines over the past 4 to 6 weeks have changed any of that. The PMI numbers certainly suggest that it hasn't. We continue to look at standstill implied by business confidence numbers for April, but of course they don't capture this most recent news. We'll see how the revised S&P Global PMI numbers in their next iteration end up looking. But as it stands now, business confidence is still very much in the doldrums. And the real question then becomes, we already saw in the first quarter that the growth in consumption, which at 68.5% is by far the largest contributor to GDP, we already saw that it slowed to the weakest since the second quarter of 2023. That is the weakest in almost 3 years, almost 2 years rather. And so with that, the question really is, are consumers paying attention to any of these headlines, or are they just ingesting that there is a lot of back and forth and a lot of noise and retrenching broadly without account for the granular details that, frankly, people like me obsess over? And we're going to find out, because later this week we are going to get a real check on where consumers are. Expectations for retail sales this week that they're going to come to a standstill in April. The year-on-year rate expected to come down to the lowest we'd seen since early 2024 at 1.1%. And consumer confidence expected to hold near the recent lows, where we got, because of expectations that what the tariffs would do is increase inflation downwind. One-year inflation expectations in the March survey here up to a blistering 6.5%, worse than it was at the post-COVID peak. And of course, with the tariffs on China now on average 30%, and maybe coming down to the new floor of 10% if all goes well, even in that best case scenario, we're still looking at much higher tariffs. On average, a 5-fold increase versus an average tariff of 2% before any of these gains. And if consumers are not getting any happier as a function of these headlines, looking at the data, well then what we're seeing in stock markets may well just be a blow-off sentiment sweep that doesn't survive contact with what the real economy is doing. And for that, we'll ask consumers this week, see what they say. That's Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. In just 30 minutes' time, I'll be on, as I am every Tuesday, with Victor Jones for The Price of Truth. So come check out that conversation. It is always interesting. I'm on with Chris for Futures Power Hour Mondays and Fridays. Back with Victor and Tom for First Call Sundays. Writing for the news and insights portion of tastylive.com. And commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow.
What is going on, everybody, and welcome back to Risk of the Week. Today, another volatile week in the market. We got a lot of bullish headlines over the weekend and throughout this week so far. So let us know what you're trading. Let us know how you're managing it. Today is Tuesday, where we put on a new risk. So we'll see how our trades from last week panned out, and then we'll go ahead and talk about the ones we put on today. But before we get into it, Gus, my brother, how are we doing today?
Oh man, doing great. Yeah, I've been long delta throughout this entire bull cycle.
Must
I've
be nice.
been taking profits, taking names. It's been a good series of days here. Just basically stacking the capital back up and getting ready to redeploy. You never know when we might get another volatility event. So, yeah, feeling good, feeling juiced, jazzed, ready to go. Managed to get out of this AMAT position that's been annoying me for like 2 months today. Finally, I was so marginally up and it's just been down forever. And I was like, get this thing out of my account. So I was very happy to see that flip green. It's been a good day so far. How about you?
Good to hear. I know you've been really long delta, so I know days like this are really playing out in your favor. So I'm cheering for you on this side of things. But I mean, things have been going well over here too. I'm not as long delta. I have some short delta on in QQQ. In SPY, of course, I feel like I always have short delta on in there. And then some of the trades from last week worked out really well because of that gap up over the weekend with a lot of talks on the new trade deal, going back and forth with China. Apparently, the market had a positive reaction to that. So I woke up with Apple gapping up, Lulu gapping up, those names gapping up. So just taking those off into this rally and putting on some more risk of the week, as we'll get into here in a moment. But things have been working out really well. What are your thoughts on the recent rally we've seen over the weekend and continued into today?
Yeah, it's very interesting. I mean, obviously, you know, the initial rally out of the Liberation Day stuff came with the tariff pause, but now all of this is actually being driven by some more legitimate tariff resolutions. And every time we start to reach a resolution with another country, it makes me more and more confident that we might have things figured out by the time that July 9th date rolls around, and that may not be as parabolic as I've been pricing in my mind this entire time. So yeah, I think it's very interesting. I've enjoyed keeping up with all of the China news. Been trading a little bit based on that action as well. But yeah, it's I don't know. It's funny. I mean, it's like, we're almost just back. I mean, SPY is almost back at 600 or SPX back at 6,000, whichever you prefer. But we're chugging upward, and it's like, holy cow, are we just going to rip up and all of a sudden do a 7% year? Like, this could be kind of crazy if this momentum continues. So yeah, it's been very fun to look at in the macro. And I will say the trades are getting less and less easy and plentiful by the day. We've had a few weeks here. We've had a few weeks here where I was never even considering, let me find a bearish angle. It was always, I could just throw that out and I could just say, let me find something that I think is going to continue up or that is lagging behind the rest of the market and will catch up, which is what I've employed with our few previous risks of the week, TNA, Victoria's Secret, these things that tend to lag, and those have worked out very well. But now that we're starting to get near the top again, there's not as many things where I'm just like, oh, this is a no-brainer that this is going to return to X level. So it does get a bit more challenging. It's always nice. And I said before that was the environment I was trading in when I very first started trading, was the COVID recovery. And I was like, this is the easiest thing in the world. I just buy a naked Apple call and I make $400 in 20 minutes. It's awesome. So yeah, it's, where the days are running out on that ease.
No, I hear you completely. I mean, hey, could you ask for anything less, Gus? I mean, being that positioned long delta, I mean, could you ask for anything less on the rally that we've seen? So, it sounds like the dip was just a little bit of a stop hunt, if you will. And maybe we're back at all-time highs. I don't know. But we do have that time window with the tariff pause. So we'll see what we get throughout of that. But it is risk of the week, Gus. As we dive into this first slide here, it looks like things are working out pretty well so far. I know you've been pretty much long on most of your positions. Now it looks like we're getting on a short position here. Let us know a little bit more about it.
Yeah, so I'm gonna try to get cute and contrarian here. I haven't done this since our very first risk of the week, which is the only stain on my record from that first slide was the first week when I decided to try to get contrarian and go against the market. I'm doing the same thing here. It's been a lot of good China news all week, and I am getting short on Alibaba. So I've taken a bear put spread. It's 10 DTE. It's already May 13th. Golly, it's 10 DTE. Expires on the 23rd. I have bought the 139, sold the 137. So Alibaba, they recovered quick out of the Liberation Day pullback. They're already trading around 10% from their all-time highs. If you look at it from a TA perspective, it's very much back to what would be considered normal levels for this company. And there's been this great week as this trade war with China, begins to become a little bit more clear. The uncertainty is coming off. And we've seen gaps in Alibaba as this news continues to break, which makes sense. But I do think that their sales are going to be down for this quarter amid all of this tariff uncertainty. I think that some people have probably laid off. Maybe the drop shippers were loading up when all of this was rumor and have since stopped, as it's become more difficult. And I think that their forward guidance is going to be strong, especially with the news that's been breaking this week. They have an earnings call on Thursday. I should have mentioned that at the beginning, Thursday after the close. And their forward guidance is probably going to be good, and all of this news has came at just the right time. I'm sure that the leaders of Alibaba are frantically updating their forward guidance with every bit of news that breaks. But I just think that this run-up this week has been a lot in response to all of this news. There's gaps to the downside that need to get filled, and I'm hoping that poor earnings numbers, I'm hoping that they will miss expectations for this quarter based on all of this tariff uncertainty hurting their sales, and that will be enough to outweigh that poured forward guidance and bring them down just a little bit. This is 10 DTE. This is tight. I don't need it to stay below these levels for months and months at a time or have some continued downturn. I just need a small, even 2 to 3% gap down on this earnings, and that would put me in a pretty favorable spot for this to expire with max profit. So yeah, that's my sentiment on Alibaba here. We will see if I get burned, and I will add that I'm long yin, which is 3x China bullish shares. At the same time that I'm short Alibaba, so a little bit of contradiction going on in the portfolio right now. But that's my thought process. We're short in Alibaba.
No, I like it. Getting involved with some of these Chinese names. I know the one that I had chosen for today. It seems like a lot of the underlyings we're choosing right now are going to be heavily affected by the tariff outcome. So Baba is going to be an interesting one, especially because this is a country we're in one of the biggest trade wars with right now. So a little bit of a 2-3% gap down based on the potential volatility. I don't think that's too far-fetched.
It's my job as a God-fearing American to short these companies. Yeah, no, but like I said, I don't need it to be cataclysmic. Just need a little bit, just a little tiny sell-off. Mike, you make a great point about the data centers. I'm telling you, man, this cloud computing and these data centers, they just fly under the radar. You never think about them unless you put in special effort to make that happen. So, I mean, certainly, and again, it's risk of the weeks. Of course, there's going to be a little bit of risk here, but I feel like there's a better chance that it moves down than it moves up. And if it does move up, I'm 5-1 in this series. I can afford to eat one.
But is that not all of our trade thesis? I think there's a better chance we could be going up, or I think there's a better chance we could be going down. True. So I'm positioning myself this way.
It's all the expected value equation. So yeah,
100%. I know on this one, NVIDIA is looking a little different here, but NVIDIA, we're going to be looking to get short some NVIDIA. I know the semiconductor space, this space has been a little bit more quiet after the insane rally that we've gotten over what the last, I think it might be a year now, I think, when all the semiconductors in NVIDIA was popping off, but NVIDIA has been brushed under the rug. It was the most popular name. Now it's not in the headlines. Nobody cares about it, but NVIDIA has been going on an absolute tear to the upside. So I did position myself short here at the same time, Gus. So both of us are positioned the same way. Sold the call spread, went for June 20th, not doing the 10 days. There is earnings within this cycle period for NVIDIA. So I chose to go a little further out because I don't want to get in the way of that. But I was able to collect about $1.72 in credit. Sold the call spread, got a little aggressive. I believe it was 43 delta, 46 delta, somewhere around there. So it was a little aggressive. But excuse me, a lot of the valuations resemble kind of like a .com era extreme. I'm not calling the top on these stocks. I'm not saying it was a bubble, but it was looking like price was rapidly increasing faster than the valuations for the overall company could keep up. So looking to be a little bearish over here on NVIDIA. And I don't want to use the word scared, but I'm not as hesitant is a better word. I'm not as hesitant to trade NVIDIA, or at least get shorted now that it's cooled off a little bit now, because it was on the no trade list for me for a while, right behind Tesla.
Yeah, it's true, and I think that this is another good spot where you can catch something that might be overextended and trying to price in all of this news and earnings to too great of an extent where it could just take a slight step down off of earnings or just into the next week, could move on sentiment. There's all sorts of ways that this could move. So yeah, I'm here for it. It's I'm seeing gaps to the downside over here as well. Also, Emmett, thank you for the compliment on the shirt. Shout out to my dad for buying this shirt that didn't fit, so I have it now.
Okay. But your dad was giving you gym motivation. That's exactly what it was.
Yeah, right. But I like this NVIDIA trade. I'm here for it. I mean, it's obviously inherently risky. It feels a little bit contrarian and crazy to be getting short NVIDIA in this environment, but it's risk of the week. That's what we do. Somebody has to be the contrarian. Somebody has to fill these long orders that are going to be successful.
Orders. Thank you. Brother, thank you. I'm glad we're on the same page there. So somebody's got to fill these orders.
And I noticed this NVIDIA logo. It looks really familiar. I can't place it, but
I'm glad you like.
It really reminds me of tech. I can't explain it.
It's that nostalgia feeling,
Yeah, it looks kind of stupid, honestly. I don't think anyone would buy any products with this logo on it. Really, it's kind of like, 100%. Why is there a bite out of the apple? Just do a whole apple.
That was me verbatim maybe 15 years ago. No joke. Like, that was me right before iPhone blew up past the level it already blew up at. So we'll jump into this platform here. We'll take a look at these underlying, see how the market's been responding. But I mean, the market straight face ripper all day today, Gus. Last 10 minutes, we got a little bit of a sell-off, but this market environment is no joke.
No, yeah, it's been a fun one. Yeah, we'll definitely take a look at Target here as well for our man Gregor. But yeah, a face ripper is a good word for it. They say that stocks take the stairs up and the elevator down, and that has not been the case in this recovery. We are taking the elevator both directions. We're saving the leg work on the way up.
100%.
So yeah, I mean, like I said, it's just I loaded all those shares at the bottom, so it's basically been exit week for me this week. There's been a lot more exits than there has been entries.
I like that. I like that. Target. You haven't traded Target recently, have you, Gus? But I know we got Target over here.
I haven't.
It's been a little while for myself on Target at least, but Target's been absolutely beat down. Pretty decent IB rank. The volume is there, so the liquidity is there. What is the options chain looking at? Let's just take a quick peek. It's looking like we have earnings before the bell, May 21st. So that's about 8 days away. So next week, that's something to look out for. July cycle. I mean, the premiums right off of the bat. Like, sometimes my eyes will go straight to the expected move. I'm like, not the most attractive move, because I mean, we're not even near the one standard deviation move on Target, and we're all the way in the July 18th cycle. So maybe this is something you could look to putting on a debit on. Premiums aren't looking as attractive. I mean, even if we go to At the Money, we sell a $5 wide, we get $1.80, which isn't bad. But then again, we are trading right at the money. So it's been a little while for Target. I'm a little bit more on the Walmart side. I kind of grew up going to Walmart, so it kind of has a soft spot there. Target, don't get me wrong, Target's one of the GOATs. Yeah, I love me a nice little Target run, especially after a fresh haircut back in the day. So I don't know what your thoughts are on.
I think you explained it pretty well. Target definitely has some nostalgia value to it for me. It used to be lit when you were a kid. You go to Target, man, get some popcorn or an icy or something like that. Walk
video
around.
Game section.
Yeah, video game section. Hop on the little example consoles and play some Mario Kart or whatever. But yeah, Target, it's an interesting one. I mean, they're at north of 5-year lows now. I actually just manually scrolled 5 years back on my chart until I hit the wall, and I could not find a time that's been lower than this. So it's 5+ year lows is what we'll call it. And yeah, it's an interesting one. I have a hard time, markets aside, I have a hard time as a consumer kind of seeing where Target fits into the broader retail space, especially as things continue to evolve. I don't feel like Target offers, you look at a Walmart, it's like, okay, they have, tires. Walmart's will have guns in states that with looser gun laws, things like that.
Right.
And and Walmart's expanding into the grocery section now, and I feel like there's just nothing that really differentiates Target. They kind of have a vibe. There's certainly a brand there, but I don't know as far as the future of this company. They're in a gray area. Yeah, they are. They are just kind of in limbo. I feel like, my impression at least is that they sell roughly the same goods as Walmart, but at a slightly higher price. Target does have good offerings for clothes, like staple clothes, T-shirts, pairs of pants, things like that. I think that they have a place, but I'm not surprised with the continued decline, especially in the ever increasing competitive retail environment. So I'm not really sure. It feels like it's probably oversold if I just scrolled all the way to as far back as I could go on my chart and couldn't find a time that it's ever been lower. But also, while the entire market is recovering out of this Liberation Day stuff, Target made a small recovery and then just continued to lag to lower lows, which is uncharacteristic of almost anything else that we're seeing in the market right now. Kind of just, I think gross is the word that I would use. This is sort of just a gross looking chart. I don't know if I would touch it.
No, yeah. I mean, Target's been absolutely beat down. I know it's not as bad, like Lone just mentioned here. I know it's not as bad as Kmart. Excuse me. Shout out to Kmart. Shout out to all the Sears people. That's definitely in our memory bank. A little bit of nostalgia there, but excuse me. Target's been going strong. So it is in a weird gray area though, because Target, I don't know how many people, maybe some do in chat, but purchase groceries from Target. I know when I think of Walmart, I know we have other merchandise at Walmart, but like the core of Walmart to me is like groceries and then everything else after. Like I know it has video game section, houseware, kitchenware, it has everything else, but it's like the core. Walmart wouldn't be Walmart without groceries. Target, right? There's a Target and then there's a super Target. Target could be Target without a grocery store. So it's like Target is more for those other merchandise. Either way, gray area. I know Publix out here. I know Publix in Florida and somewhere on the East Coast is a lot more popular. And then other things like Trader Joe's, these other grocery stores. So when I think of Target and I think of Walmart, Target relative to everywhere else just seems like it's in an awkward spot.
Well,
like,
I think the way to quantify it is like if you name grocery stores, Target isn't going to come to mind very quickly. No. If you name department stores, Target probably won't come to mind until the third or fourth one that you name. And so what are they? Where do they fit into this calculus? It's a weird thing. And conversely, a company like Walmart, they would be the first or second company I would say is my answer to both of those questions. So it just, it feels like there's other people that are better suited for this environment right now. Mike says, I think Target's going to get purchased by someone. I keep buying shares in the dips. That's an interesting thought. I could potentially see that. They obviously have massive infrastructure and numerous locations all over the place. So perhaps a good buyout candidate. That might be a good shout. But outside of that capacity, I don't love Target as a company. I don't think that their fundamentals are any better than, say a Walmart or a Kroger or a Publix. I certainly can't get there. I don't know that I would get short either, though. It's hard to get short at 5+ year lows as well. It just kind of feels like a ignore to me.
And excuse me, buying the dip every time Target is dipping, somebody's going to buy them out. I don't know, Grimmy Mike. It sounds like you might end up being the majority stakeholder, because if you keep buying the dips on the way, I think we got a long way down. So no, I'm just kidding.
Yeah, Mike, if you're about to flip to 51%, please let us know.
Yeah, let us know, because a few more dips, you might be
Warren Buffett acquisition of Target there.
Yeah, 100%. Quick tour to market. Obviously, market's been rallying like crazy over the last few days. Let's change the time window on some of these real quick. Go to the daily. There we go. So, I mean, just looking at the daily on the S&P 500, absolute face ripper to the upside. I mean, just barely a month ago, we're trading down to around 485, 483 on SPY. Now we're trading at around almost 600. So just shy of 600. That's a massive rally in such a short period of time. So I know I still have more short positions on in SPY, QQQ. Maybe we get a decent pullback after this insane ripper that we've had. But on the contrary, because the market's been ripping to the upside, volatility has been getting absolutely crushed, which you have some directional positions on. Well, you did have more directional positions on to the upside. And then also vol spot. So volatility been getting absolutely crushed and still sitting at 18, despite it trading at around 62 over back early April. So, I mean, the overall market feels like volatility has been really contracting, but relative to where we've seen a lot of 2024, we're still sitting in a pretty nice area, in a pretty good spot. We're not doing too bad. So there's SPY and there's VIX. Here in a moment, we'll get into the other positions. But what are your thoughts on volatility before we move forward, Gus?
Yeah,
definitely a different environment.
I just think it's funny how quickly sentiment shifts, and it's not a fault of anybody. It's what you have to be able to do as a trader and trading in the way that we do. Right. But all of a sudden we're like, oh my God, volatility is so low. But as you said, I mean, we're really just at pretty typical VIX levels here. You have to snap into the conditioning of VIX is at 50. The world is the sky is falling. Right. And, so it seems like this pronounced contraction and volatility. Really, we're just returning to where we were before these volatility events. I don't see any problem with that. However, I have said on the show numerous times, Errol, if VIX gets below 20, should I just blindly go long? And perhaps I have to.
Honestly, during this administration, it might be a no-brainer.
That's what I'm saying. If it gets below 20, I feel like I can just go 60 days long on VIX and wait. And that has to print sometime, right? Chat, what do we think?
Your VIX